Okay, good morning. Good morning, everyone. And just to let you know what's happening here, we set the program Swing Machine Plus last night to only take shorts. And that's fine. And what do? They jammed it. They absolutely did at 3:35, the little bastards, right? 3:35, right before the war room comes in. They came in a little early and they jammed it. Um, 4,300 bucks, but that's okay. I don't beat myself up over missed trades. It's fine. If I had played it both sides, yeah, we would have caught it. But I still think the bigger trade will be to the fade side, but we'll see. I may not be coaching this one right. But I'm not coaching you to do anything with your money. We're playing the game our way. And so it's a modest week. It's a modest week, very modest. And so I don't, and from a profit factor standpoint, I'm like around 1.7, 1.8. It's been of a grind. So I don't give myself very high grade for trading this week. But you know what? I still think with this rally here, I don't ordinarily want to play on a Friday, but I think this Friday I do. So once again, we got it set just to take the short, and we'll see. Any questions? Let us know. I'm Bagadon. This is Stock Market Caddy, and we hope you're getting it done with whatever it is you're doing. Let's clean this up here a little bit. Put a marker around this. Whoops, we don't want that color. We'll do it in white. How's that? There it is. Nope. There we go. That was our beginning balance. And that's Gracie. That is in my stomach. She's growling away. All right. Enjoy. We'll see if we get some fatties here. Again, we're only taking shorts. We made that decision last night. It made money on the short side, but it missed the 3:35 tea time. Again, that is the dangerous time of it isn't the dangerous time. It's when the American public is getting screwed. There were some statistics that were done about how much of the moves are made overnight. It's the war room. It's the U.S. Treasury war room. They get started about 4 o'clock. Sometimes the little bastards come in early, and or someone's front running them. The Swiss national team. But the NQ and the markets took off at 3:35 in the morning. Now, if I had played it long and short, yeah, we would have caught it and would be up about $4,800 and would be down. But I made a coaching decision that, you know what, I would forego some sort of suckers rally overnight and I'd play it to the short side. Well, um, you know, put it on the coach. I didn't think that's 4,500 bucks is, a 1% move isn't a suckers rally. I would have expected maybe a 0.5% run or something like that and then turn back down. So it is what it is. A very modest week. Profit factor, a bit of a grind. Not a good performance for me this week, about 1.8 or so thereabouts. But we're going to go ahead. I told Susie, you know what? I'm going to still play it to the downside because um, I, you know, I don't want to influence anybody, but I think there's room there. So we'll see. Now the systems are long. The Nicholas timing model is long and it's up thousands of dollars. It was long like 2 or 3 nights ago. So um that's why I asked, we don't want our members following me. I'm not trying to influence anybody. Um but intraday is intraday. And so if this sucker goes short, we'll be on it, and let's see if we can punch it up. Amazing. Absolutely amazing. But again, there are some stats. If somebody wants to Google this, how much has the S&P moved, after hours between like, we should even run this. We could run this ourselves, from like 4 in the afternoon to, 9:30 in the morning. It moves, it makes big moves. And they usually come between, we actually think there's three rivers in the market, three rivers to fish. 3 in the morning to 8, 8 to about 11, and then, 2 to 3, and then you got the last hour. So I usually, and I won't be here today in the last hour. I may be here to watch it close, but I don't like to be in the last hour. A lot of panic and a lot of nonsense in the last hour on any day. Enjoy. Good morning. Good morning, everyone. Just a real quick update. Last night, I made a coaching decision to play it just to the short side. Overnight, we picked up a little short. We did miss this one. It was up almost 5,000. 3:35 in the morning, the bastards took it up. And that's the plunge protection team. That's the Treasury War Room. That's the Swiss national team. These markets will make big moves in the early morning sessions before the American public get their ass out of bed. So, but I didn't play it to the long side. I was more suspect that they might try. I still think maybe, I didn't think it would be that much. I thought maybe they might do a little suckers rally overnight. So we'll see. We're still playing it only to the short side. Maybe you would have played it different. Maybe we have a member that did. I haven't heard yet. I will before the day is over, I'm sure. A modest week thus far. My profit factor is around 1.8. That's not so great, Donald, but that's okay, right? I got another week and a week, and it doesn't, so we shall see. Wish everyone the best. We're going to let you watch, and let's see if we can get uh, a pullback. I still think real good money to be made on the dark side. However, all of our systems on a daily basis, the Nicholas, the swing machine, much of it is long. Okay. It's been a crazy week for the marshals here this past week. So we'll tell you another day. But um it's been a time challenged week where just to share with everybody, I am Bagger Don. This is Stock Market Caddy. A friendly reminder, when we punch up like this, I'm not trying to prove an outcome. I'm not. Right? I don't know on any session. I'm not trying to say that within a certain period of time we're going to make X amount of money. Um, I'm not. Um, the reason why we punch up is to create awareness of who we are so that maybe entice you to visit the website and to see what you see. And if you have questions, you can ask. And either in the chat or email, or if you're welcome to call. Now, if you call, happy to chat with you. I would just hope that you've explored the website at least a little bit. And I'm happy to have some conversations. Um, and I'll be very real with everybody. Um, we want people to make the very best decision for themselves up front, throughout, and we want you to do well, right? I mean, that's what we want, but I can't promise anybody an outcome. I can't promise myself an outcome, right? I mean, we have to get in here every day, every week, but fortunately, it's something that I love to do. Susan likes to do it. She will trade mostly in the morning and be out and has a different style and not as much time. But I really do love the whole thing about it, the whole thing. Um, I'm not a huge fan, certainly not politically, of Tom Sosnoff. I am not. Um, but he's the gentleman who founded Thinkorswim, and he is an excellent trader. I know he takes some jabs, but he's a good trader, and he's mostly options, right? He's an options guy, and they're very good. But I happened to catch just a couple of minutes. I was working on some things last night, and somehow he came up on my feed, and I was listening to him for a few minutes. And he said something that, that we say all the time, all the time. I mean, maybe he's, parroting. I doubt it, but and that is um learning that you're not in control of the market. You're not. I'm not. Nobody is. No one entity is. Not even the Federal Reserve, right? It is a manipulated, wild, chaotic beast, and it's uncontrollable. It's a beautiful thing, but so you can't control the market, but there are things that you can control. And this is what he was saying. If you go catch this thing like from yesterday, and he went on for about 10 minutes, I won't. But, you know, and during the Q school, we're identifying and we're making you aware of what those things are. And those things are very, very important to your outcome, critically important. And if you don't know what they are, um, you're going to struggle. You are going to struggle. Now, I can't tell you how many times, and this is not a knock, it isn't, right? It's just, it isn't. But how many times we will get phone calls from people and they'll tell me, I've been trading for 2 years. I've been trading for 10 years. I've been trading for 15 years. And I'll ask them, Do you know what a do you know what a profit factor is? And those things, well, yeah, it's kind of and we'll get some kind of an answer. And sometimes it's close and usually it isn't, but sometimes it's close. But it's one thing to know what a profit factor is, right? Even if somebody nailed it, because the next question is going to be, do you know what yours is every day, every week? And they don't. None of them. None of them. In fact, I have, I only had one, no, I've never had in all the time we've been doing this. Imagine this. for all these years of stock market caddy is like 12 years. Scary, scary. I've never had one person tell me that. I've had people tell me what a profit factor is, but I've never had one person tell me they know what their profit factor is from last week, last month, or last year. Not one. Not one. And it's so critically important because it's your scorecard. It isn't the money. It isn't. I just can't emphasize it enough. So in any case, it's there. And it's one thing to have the information, it's one thing to have the tools, but you've got to implement the tools and you got to implement them, you know, as intended, to get the best outcome. If you don't execute, a lot of people are going to go on a diet this year. It's January 17th, they're probably, falling off the wagon right about now. Um, they just don't execute. So it it's a wonderful endeavor of trading, but it does take discipline, it does take patience, and it does take execution, and it does take time. I did have, and the gentleman may be listening, so I'm not going to mention his name. Very nice gentleman, very sincere, asked very, very good questions. He really did. And he's been trading mostly options. And I we got to the place where one of the questions I like to ask people is what is if you were to, and he doesn't trade futures, but if you were to realize, and I said, I don't want to know your financial picture because I really don't need to know. Nobody needs to know, how much money you have or anything else of the sort. They don't. Um, it's none of anybody's business, least of whom me. But the way I like to phrase it is, if you were to, and what I said to the gentleman, if you were to realize your or fulfill your trading dreams and trading futures intraday, which is what he wanted to do. And he was trading mostly options as he described, and then futures during the day. How much money, how much money do you feel you need to make on a monthly basis? And the reason why I ask that question is I want to know, and I think the person should know, right? I'm not going to pull any punches, but I want to know, are they grounded? Are they real? Do they have realistic expectations of what this is? And I've gotten all kinds of answers. Sometimes I'll get an answer that says, you know what, Don, I've never traded futures before, and my anything that's positive after a month would be good for me. I've had others say, $1,000. I've had others say, $5,000, $10,000 a month. Um, I had a gentleman from the Balkans, and he told me like 4x, and I'm like 4x. I didn't even know I'm like 4x. What do you mean? He goes, well, four times my trading capital. Oh, okay. That's it. That's all you want to make? Well, yeah. I mean, I like to make more, but at minimum, I got to make four times. Okay. Well, that's not realistic. He wants to, so that would be if he has, a $20,000 account, he wants to make $80,000 a month. Okay. Well, good luck. And, I'm not going to waste my time, right? If that's his expectation and that's what he wants to do, he's going to be, cursing and moaning and stuff because that's not going to happen, right? And I don't want to spend 3 weeks of my life, with someone who's not grounded. Now, down the road, could a person do that? And then something, we've had people blow it out, but it took them years to learn and, be at the right place, right time. And, so I'm not out to limit anybody, but if you have an unrealistic goal or an how do I put this? If if you're trying to do something that doesn't exist or can't exist, you're going to be disappointed, right? I mean, it's just you apply that to anything. So I'm not going to disclose, but in the end, this gentleman I spoke to yesterday did disclose to me, and I'm just going to say he said, his trading capital that he was going to have was somewhere around 20 to 25,000, right? And so, for a futures account, that's fine. That's fine to start there. I think you can get a minimum account. Now if you're going to intraday trade stock, you're going to have, the pattern day trader rule. You got to have a minimum of 25,000 in there all the time. When you're trading futures, you don't, right? You can open up an account for as little as what, maybe 2,500, 5,000, somewhere around there. Um, but it's critically important that you trade that small account proportionately and we're in the game. Or otherwise, you're just gonna, if you keep over leveraging it, you're just gonna keep feeding the kitty, and you're gonna have a big fat kitty. Um, or your big fat kitty is gonna be skinny because you're gonna keep feeding the the trading account. So, so you got to learn. Um, but he went ahead and told me, and his account was about 20 to 25,000. But, we had answered all these other questions, and then so it got down to that question about like, well, how much do you need to make and want to make on a monthly basis? Like soon too, rolling out. And he told me about 35 to $40,000 a month. 35 to $40,000 a month. Um, that's not going to happen. It's not going to happen. And I told him that. And he said, okay, I appreciate it, Don. Nice chatting with you. And I'll catch you on the other side. And I'm like, okay, no problem. Then, I'm sorry to, burst anyone's bubble. But, Santa Claus doesn't exist, and the Tooth Fairy doesn't exist, and, I'm not gonna pretend that it does. Somebody with no trading experience is not going to take an account with 20 to $25,000 and make 35 to $40,000 a month every month. Because that's what his thing. I'm like, okay, let's equate that. That's about four to $500,000 a year. And now, on an account that size, because now, no, I'm not saying is it not possible that somebody could get a 10 bagger, and that's basically it is, but you would have to take, Um, I mean, theoretically possible, but you would have to take outlier risk. You would have to be risking it all. You'd have to risk the whole account, you know. And even then, I'm not even sure that, those kind of numbers could be produced. So that's not what we do. I hope if the gentleman's listening, I mean, I sincerely, he was very, very nice. He asked very, very good questions. I'm not being critical. I'm not. Um, Nobody really explained to him, and none of the brokerages are going to tell you. I mean, they might even tell you, yeah, sure, but I'm not going to. I don't want to see anybody wasting their time or wasting their money. Now, please understand, and I said to him, maybe you didn't hear it, I'll say it here. That size account is plenty big enough to get underway. I mean, you can get underway with as little as 5,000, and you can be using our tools. You'd have to use micro. You would on most of them, and it would be a fine place to learn. And I told him the story, and I tell everyone the story, and it's a true story. We got videos on this, and the gentleman from Utah that came in with about 5,000 bucks and over 3, 4, 5 months, traded futures and got himself to about 20 some odd thousand. And he honed something specific, trading point and figure, that he got really, really comfortable with. And he was smart enough to know he didn't do anything else. That's what he was doing. And then he got involved. He got himself the education. He had, and in fact, Logan, when he came to us, he said, "Don, as long that was his goal, as long as I'm profitable." And he came in and said, "I don't know anything. I would like to know what you know." And that's how it kind of got started. And then he took that money and got involved with Ethereum when it was at about $20 a coin. And Logan, absolutely blew it out. He's a multimillionaire and has a big motorhome and just blew it out. Some might say he was, but he's not he's a trader, right? He's not a hodler. He's a trader. And he learned. So, any case, I share it. I hope it's helpful. You've got to be real, right? And if you call me, you may not want to put something in the chat, may not, um, I will be real with you. Um, because we want you to make the best decision. And even if that decision is like, no, I don't think I want to do this, well, that's probably good for you, good for us. And, maybe, and I'm the first one to say, maybe there's another avenue, maybe, I mean, well, there are other avenues. There always is. So sorry about that. So, back to our trading here. Um, I made a coaching decision last night that I mentioned to everybody, but I'll just mention it again to put the Swing Machine Plus only taking shorts. Um, I thought that there might be a little bit of a squeeze. Um, and I thought it might be a bit of a suckers rally. I didn't think they would run it like they did here at 335, tack on another percent here, before the public markets open, Jesus. They're brutal, man. They're brutal. And we may not get it. And I think some of it might be this, inaugural, euphoria and stuff. Maybe it is. I don't know. Somebody's pouring it in. It's easy to do, when you have the billions. Um, had we played both sides, yeah, we would have been on that trade. We'd be in that trade and we'd be out and we'd be done, right? We'd be done. Am I going to beat myself up over it? No, no, no big deal. Um, and it's been a modest week, modest profit factor, and God bless you, Susan. We're um, challenged a little bit this week. Abby pulled Susan down last week, and has a has an injury that she's recouping from. She's gonna make a full recovery from it. So we're Bagger is the girl's still a lot around the house. You gotta find out. We're joking about it. Do a lot of stuff to keep the house going. So, any case, but we're gonna stay with the short side and see if this goes off. So I'm not gonna try to do any mechanical trading. But give thought to you know, what if you are to realize your trading dreams, how much money do you need and want to make on a monthly basis? And then you got to do some calculations. There are 20 there, there's only 24 trading days, 24, right? If you trade every day, and I don't think you want to trade every day. So let's take one day off. And now we're down to 20. So, $100. Can you make $100 a day? Trading micros? Absolutely. Yeah, absolutely. It's 2000 a month, but it may not be worth your time. It may not. I get it. But it's a stepping stone, right? Because if you can do that and demonstrate to yourself and to your spouse, and you start doing that and you do it month after month, okay. Now you continue doing the same thing and you just step it up. You do exactly the same thing, and now you just increase the leverage a little bit, a little bit. You don't come in, all right, now I'm gonna go. No, you just stay proportional. Now all of a sudden, now you're making 200 a month. Okay. And instead of making $2,000 a month, you're making 4,000 a month. Okay. All right. Now that may be still not enough where you want to be, but you're learning even more. You're putting in the time, you're developing a routine, you're developing a new behaviors. and now you increase it a little bit. And then what's going to happen? Then you're gonna, maybe it'll be 300, but it won't be, you know, it could be a little lumpy, right? But we lean on getting positive ORs. In fact, back to the conversation with I wasn't talking with him, but I was listening with Sosnoff. He was talking about, controlling only being, that you're not in control and you can of the market, but you are in control of a lot of things, right? And we define what those things are during the Q school, right? It's important to know. You are in control of a lot. You may not know. Because of course, if you don't know what you don't know, then you're not in control, right? Same thing like for a pilot. But he said for himself, he doesn't bother chasing the tails. What are the tails? Those are the fat tails. Those are the negative outliers and the positive outliers. Well, I agree with that. I get that, right? And that's good actually. But we're all it isn't we don't count on this, but my style of trading is no, I don't want any fat tails on the negative side, but I do want to get the occasional fat tail on the long side. And you can do that, right? You just can't do it every time, right? This would have been a fat tail on the positive side at 335 because the average payout on the 5 minute is 2 grand. I mean, if we do two times that amount, that's a fat tail. I didn't get it, right? Um, I didn't get the other one this week. Bag of Don's has some little demands, a little I'm human, we're human and we got some things that interrupted our life a little bit. Abby, pulling Susie down. So beautiful little pup. What happened was we got her spayed and they told us that, we can't take her to the dog park. Um, Well, she's a 1 year old golden, right? She's been going to the dog park for every week. Well, for 2 weeks. So after a week of that, I mean, this dog is climbing the walls. I mean, this dog wants to run. And Susie took her out for her normal walk. Dog bolted. And fortunately, she didn't get hurt, the dog, but Susie took an injury. So she'll be, it'll be something she can get over. But they're strong. She's 65 pounds of muscle. You got to keep a good grip on it. And she's a little spooky. Any case, we'll let you watch, but we're just waiting. We're waiting for Swing Machine to put us short. We'll see if we get it. Maybe we don't. And I'll try to answer any other questions. Feel free to put them in the chat and we can take a look. Now, also too, I do want you to know if you had been a monthly member, let me take you here. This is the Nicholas timing model. And so this was on the 15th, and the VIX went short and all the markets went long. And you would be up. That number's not correct. That's not calculating correctly. I don't know why, but this is how much you would be up. So remember, I think I mentioned on YouTube how we have monthly members that every time Nicholas goes long or short, they just get a call or a put option. And I didn't like to see it go long. I really didn't. I was uncomfortable with seeing it, but I'm not going to second guess it for a bunch of noise or anything. The signal is the signal. And once they go, now we can look at the model and get an idea of how long it might be, but there's no telling. I mean, it could be there for weeks. It could. Maybe that gap that I think is going to get filled, maybe that gap is a breakaway gap. Could be. I don't think so, but it could be. And but we're playing, on an intraday basis, we're playing very up close, right? So, I'm not gonna, I'll I'm thinking this would be my best bet today. Maybe I'm wrong. I don't like the fact that I'm playing on Friday. I really don't think I'll be here afternoon. I'll be here maybe with you guys and let you watch, but I don't think I'll put on any trades on a Friday. I really don't like trading at all on Friday afternoons, good or bad. I just don't. I'd rather finish with a modest week than with a punch in the gut or a bogey, double bogey, do something stupid. So I'm going to try not to do that. But, and next week will be another week, right? And Susie be feeling a lot better. And I'll have more time to do everything we need to do. All right, so we're gonna let you watch. Any questions, let us know. Be sure to visit the site. Any you want us to punch up any other market, you want to look at a stock, you want to, as well. Just put it in the chat, let me know, and I'll be happy to do it. If this goes short up here, if it confirms short, you'll see it here, you'll see it here, and then you'll see the order go in. The other platforms, there's one or two other platforms that'll let you do that. The other platforms, they're not going to let you automate anything. They don't want you, they want your hands on a mouse. They want you trading greed and fear because they know you're going to lose. Okay. I hope I'm not bending your ear. Don't let me do that. You can just turn off the volume. Um, but um, the other day, and Tina might be here. Tina's been with us for months, and I hope I didn't sound like an old curmudgeon. But there was nothing wrong. Tina had seen us the price action come back up to what had been support, but when support gets broken, it becomes resistance. And she saw the price action running back up there. And that's the problem with putting a lot of things on the screen. Can be, you start reacting to every little thing on the screen. Um, and we were up 1,000, and her question was, and I think there was another gentleman, why didn't you just take the 1,000? Um, I'm not saying that that was wrong, right? I'm not, but we really lean on everybody in the beginning to throttle way back because most retail traders, they got the attention span of a gnat. I'm not saying that's Tina, right? I'm not, right? But they're too active. They're too active and they're too just doing a little too much. If we're going to be that active or want to be really active, then you definitely want the machine to do it, right? Including me. I mean, I can get systems up and I know exactly what they're doing. And if I had to try to trade that quickly, I'd wear out in like 15 minutes. It's just way too fast. So I'd rather have the machine do it. But when price comes back up, though, and I didn't even want to have, much of a discussion on it, but when it comes back up to what was support, that is actually resistance. Now that happened. You guys didn't see it. It was right about the time we were tuning off. The price ended up coming all the way back. If you remember yesterday, we had about a $3,000 draw, right? 3,300 to be exact at one point. Well, that trade came all the way back yesterday afternoon and had cleaned up that entire draw, and I still didn't take it. I didn't even take it there. And then it even came back. Eventually, it worked off a lot of that draw yesterday, but not all of it. Not all of it. But also the trade overnight here, that 836 also helped us. I think it worked off about like 1,600. We were down about 1,600 going into the midnight hour and then overnight, attacked, so we go in there, so we still got the 1,600 and that's that. But in any case, but I also have a casual view of my weekly beginning balance. That's what I punched up there, right? Um, but that is going to be something we can make you aware of. We can make you aware of the various programs. Um, but we can't really change, and we don't really want to change your trading personality. And like I say, the only way I can describe this is like if you talk really fast, you walk really fast, you play golf really fast, you want to play fast. And you just want to get in and make a few trades a day and you have modest, okay, you know, I'm okay. I'm going to encourage you to try another approach too, but I'm also going to be able to share with you what tools are going to work best for doing that. And it isn't this one. It's not the 5 minute here. Anyways, it isn't. It would be, it would be most likely, the 1 minute in the direction of the five. And Tina might be shadowing now. She was seeing this long enough. And we can get the machine to do that. And that's pretty fast. Yeah, I mean, you're going to get, in fact, I haven't even shown you this because we do it to save space, not to hide this. So let me give you an idea. Let me, when I'm thinking about this, let me show you something. Show hide plots. Is it right here? Click on this. Here they are. All right, see the long trades here? I've got this hidden. Let me add that. Add that. I hide it just to save space. And by the way, let me also show you the clock. There's a clock here, timer for trade count. I got it starting at 0400. Maybe we should start it at 0300. because that's really maybe even 0200. Because that's really when the markets are capable of moving. Europe is waking up, the Swiss National Bank is coming in, and and if you want to go past 4 o'clock, I mean, you certainly could. And so let me show you what this is going to show you. You might be interested to know this. All right, so here they are. You can see like we're now crowding out, so I'd have to fight to show this. So anytime anybody wants to know, but you could have it on your desktop. So what this means is since 2 in the morning, there have been 8 longs and 8 shorts. That's how many trades there've been, but I don't want to trade that much, but maybe Tina does. Okay. The 5 minute, there's been one long and one short. And guess what? We got the short and we made money. We didn't get the long because I didn't play it that way. And guess what? I, I missed out on 5,600 bucks. I can laugh about it because I'm here all day, every day, all year, and I'll be here next year, and God will, and year after that, and year after that. I'm not going to get every single trade. Not going to get everyone. And if you're thinking, well, I won't go there, but um, I, we have a member, Doug, great guy, great guy. He's like, Don, I think you're holding out on me. I don't know. I think, I think you're trading more than one mini. I think you are. I think you're holding back. Uh, um, we certainly have the firepower to do it, but as a general rule, that's where I'm at because it's extremely comfortable. It's like a pair of slippers, very, very comfortable. Um, you know, but those that can count the number of trades. So, you've got as a trader, and we will work with you during the Q school, have those conversations, and I'll get an idea. I'll get an idea. Um, with Tina, I would be leaning on her a little bit and encouraging her to be more patient. And because just to be able to see it play out, and not maybe work as hard. But then again, but in the end, folks are going to do what they want to do, right? And that's cool. I mean, that's totally fine, right? I'm not, and I've done that with Susan, right? I've made no bones about it. Susie is more risk averse than, let's see here, where am I at here? Um, than greedy, and I am more greedy. I'll embrace risk, maybe a little bit more than I should sometimes, but so then that's kind of where it comes down to. And also though, I got all the time. I got all the time in the world, right? So pretty much, knock on wood, God willing. On an account this size, um, could, I mean, intraday, you only need $2,400. You only need $2,400 to trade one mini. So let's think about that. Could I have put on not at 335? So at 335, you would have had to you couldn't have. It would have been $24,000 of your account. So you could have only got one mini on. Um, but let's say this signal happened at 9:35. Well, the brokerage is going to give you, margin, and the mini contract's only 2,400. So could you technically get 10 minis on? 10 minis? Yeah, sure, sure. They'll let you do it. That'd be $24,000 on a $30,000 account. Now, I don't think it would be a good idea. I don't. And I think you would be very, very scared because what could begin to happen if you got a drawdown and you fell below your maintenance margin, you're going to start getting margin calls and they're going to start getting liquidated on you. Now, if you happen to get lucky and it runs $5,000 and you get 10 of them, yeah, you'll be up 50,000. But if it goes against you, you may take a $30,000 account down to $5,000 at the end of the day. That wouldn't be very good. And that's what people do. It's very, very, um, we just don't do that, right? In the Q school, we do share over, years, decades now. I'm an older person, you know, um, many, if not all of the mistakes that we feel that we've made in hopes that you don't make them. And I'm always mindful that, and humble enough to say that, that there could be another mistake out there, that the market could throw. So I'm very, very respectful of the markets, very respectful of what we're doing, and and play it, responsibly, mature, because things shit can happen, man. Stuff can happen. Don't want it to happen, but not to be scared, isn't to be scared. It's just like this is kind of like one of those endeavors like diving, right? So we make that analogy, and going into the water 30 feet, 100 feet is potentially dangerous. But if you are, PADI certified and you've gone with an instructor and you've done your routines and you know how to buddy breathe and you go with a buddy, I'm not crazy about buddy trading though. I'm not. Um, yeah, I don't not crazy about that. I would rather um person rely on themselves, and there's a certain maturity with that. But in any case, um, the sport of diving doesn't have to be, dangerous, but it can be, if a person gets reckless or careless and goes diving on their own, gets into trouble, and anything can happen, so. Mm. And I tell the story, true story, and we used to do it, and finally we stopped doing it because I never really, Susie would be down below me diving. She'd be looking at this and looking at that, and she absolutely loved it. But I spent all my time when we were down there with my eyes glued on her, you know, that she was okay. And I finally got to a point, I'm like, Susie, I'm not really enjoying this. Um, and we stopped it. It was fine for when we did it. But if you're a diver, they probably think it's silly, and you make do hundreds of thousands of dives experience, right? But we never got to that place, and I just didn't think it was worth it. So we made a kind of a mutual decision just to snorkel and let it go. What freaked me out was I we had an open water dive in West Palm. We had to go down to get certified again, and you had to go down 100 feet, and it was murky, and blah blah blah. And we did fine, but there were a lot of people bopped up all over the place. They freaked out. It was kind of a shit show on the boat. We lost sight of the divers, and it was a drift dive to boot. And so the instructors had kind of lost their cool, not with us, but with some of the other people on the boat. Kind of read everybody the riot act a little bit, and so I was like, Jesus, it could have really been a lot worse. And when we were coming back, driving back, it was a weekend trip. We were driving back to Tampa, and I'm thinking, shit, 100 feet is a 10-story building. And I started looking at the condos, and I'm like, shit, that's like a 10-story building there. I'm like, Susie, when we did that, you ever think about it? Like, it was like all that we were there, from the floor to the ceiling there. That was how much water was above us. And that was that. That was the end of it. Once I visualized that, absolutely freaked myself out on it. And I'm like, oh, I can't, I'm never doing that again. And I was like, nope, not for me. That was it. Now, if you're a diver and you're doing it, you're probably laughing your ass off. But I was going to be comfortable doing it. Susie was disappointed, but she said, well, we'll just dive 20 or 30 feet, but you got to do the open water deep dive to get certified. And I'm like, nah, let's just snorkel. So, any case, if, we want to build your comfort level, right? It's okay to have some nerves. It's okay to have it is, in the beginning, but it will dissipate really quickly, right? It really will. If you're using these tools and everything, it will dissipate. Now, if you have a phobia, though, a phobia, like I developed with that, with diving, I wouldn't say it was a phobia. I just didn't like that idea. I just, and I wasn't going to get over it. Just wasn't. And so, and if you have a phobia of heights, that's something different. Yeah, I mean, you might be able to get on a passenger jet and stuff, but, you know, um, if you're not crazy about heights, maybe, some people can't, right? They even got a phobia. It's probably not a good idea if you have a phobia of heights that you go to flight school. Probably not a good idea. Why do that to yourself, right? Maybe take up something else. Why do that, right? I mean, it's when, there are things to get over phobias. It's probably a good idea. You don't want to be going around afraid of everything, but you don't have to be a pilot. If you have a phobia of having money go down or have money coming out of your pocket, um, and it's a phobia. And sometimes we had a member. He's no longer a member. He couldn't get over it. Mm-mm. No, he just couldn't do it. And he even said, he goes, it's just the most irrational thing, Don. Um he goes, I've even talked to my wife about it. She's like, what are you afraid of? I mean, we're fine. A $300 loss is going to be no big deal. She's like, it's no problem. And he's like, I just can't. He just couldn't get over it. So I don't know if he's over it now or not. I don't know. I've lost contact. Maybe not. So but he gave it a good effort and a good try. And that's, you know, one of the things, unfortunate. And there's also an old saying that you can't make money with scared money, right? If if you are operating, same thing, operating a business, if you are operating a business on a shoestring, you got to cut really, really close. You don't give yourself any margin. Like, if you put every last dollar you have into a Subway store and you're maxed out and you need that cash flow, if suddenly, you get hit with, COVID and there's nobody coming in buying subs and you're on a shoestring, you're done. You're done. You're gonna lose it all. And so you want to have some wood in the trade, right? And these are just some of the things. Had another gentleman who was from Europe, and he was talking about, well, I'm not really crazy about trading. I'm not really that passionate about trading. I'm really passionate in something else. I just won't even say what it is, but he was really passionate about doing that something else. And I said, so why you want to trade? He goes, well, I just want to try to make $100,000, you know, inside of a year so I can go do that something else. I said, I don't, you know what? I mean, you do what you want, but I don't think you want to do that. I think you might want to go do that something else now. He goes, well, I don't have the 100,000. I said, well, then maybe you got to go, go get a conventional job or a conventional something and get that 100,000 and then get to do it. This isn't a conventional job, you know. It's lumpy. Comes in bunches and here it's like right now it's like ice fishing. I mean, there's nothing going on. You're either on that trade at 335 and maybe you could have get in here a little bit here for this dip here, and you could have get in maybe here a little bit. But once again, I'm not doing that. Excuse me, because I don't want to be, trading that actively here, So all right. So let's go take a look at our gap. Here's the S&P, right? Do we have here it is. Jesus. They gapped it again. That's unusual. Holy smokes. Okay. So this is a 5-minute SPY. This is the public market. So this is going to have everyone thinking that this is a breakaway gap. This is a Trump breakaway. And then we go up again, and then we gap again. Very unusual. Very unusual. Um, and hmm, I would always think they're gonna, I operate that they're not breakaways and they will come back and get filled probably next week, probably after the inauguration. And it also could be a capitulatory gap. It could be all the folks that have been short or got short in the hole. We were cautioning our members like, I'm not really super bearish here. We had a nice pullback, and then I'm like, I'm not really that bearish. I'm thinking that maybe we got one more bounce to have anyways with the Trump inauguration, and I think there'll be yet another opportunity to reload. And I'm more inclined to think that it might come after Trump's been in and around that. I'm still thinking around the March timeframe. Let's take a look at, let me put the SPY, this SPY. I know you guys love charts. So let's just put this on a daily view. I can just type in D here and put this on a daily. Here's the daily view. And I think it is. Is it? I think so. Yeah. Hold on a sec. Let me reset scale. Looked like there was a gap there, but maybe not. Um, let's see. Oh, here it is here. Daily. Oh, there's the daily. No, we're not on the right thing here. I'm sorry. SPY. It changed the symbol. I didn't mean to do that. Okay. So yeah, they did gap it. So this is the SPY for the public view, the public. So again, we did this a little bit yesterday, and there are tools that will mark the gaps for you. We'll just go in and draw them in, and point them out, and we can see. We'll just start from the left someplace and see how they've treated them. So let me get a marker. All right, so we come over here. Do we see? All right, so here's a gap here. So there's a gap. And guess what? There's another little gap, but it got filled. It traded into it over here, and then it continued. Here's another gap, and it got filled over here. It got filled. They traded into it, but it took a while. Gap ups, always get filled. Gap downs don't have to get filled, but here are, so for instance, here's a gap down and it got filled over here. They traded into it, then down it went. So you can go through. So the gap the other day, the big one of this week, is this big sucker right here. That's a big gap, man. Big one. Big. And they did it held here. They didn't take it down. And then they also tried it here, but they didn't fill the whole thing. They filled a lot of it, but not all of it. What I mean by filled is that it hasn't traded in there, hasn't validated those prices. Those prices got to get validated. So for instance, like here there was a little gap in here, a little one, and it got filled in the next day. It happened to be down. They can bring them back up. So then here is yet another little gap, and that's today, a gap. Futures don't gap. They can gap, but they don't routinely gap. But they can gap because they close at 5 and they can gap, by 6 o'clock. I mean, something happens, they can gap. Um, but so here we be, right? So we're making higher highs and then everyone's doing this number and we're gonna go down and well, I think everyone got, short in the hole down here. Where is it? Maybe in here they got a little over their skis and then they got squeezed and they're still getting squeezed. They keep shorting in the hole. Don't short in the hole. Don't. The best thing that we could root for, but it's going to do what it's going to do on a daily basis. The best thing, if you want to get short, is you want to see this bugger come back up here. Just come back on up, buddy, and then maybe even break it, and then and do it quickly, and then fade it up. We'll wait for the reversal, wait for our machinery, and try to take it back down. And at least you get a decent trade off, and then maybe you get something else. But that's hieroglyphics. I mean, that's the future, and we don't know. We don't know what it's going to do, but we get the technology to map it. But there is ever so slightly, excuse me, that was a gap. Do I have the right gaps? Wait a minute, wait a minute. This isn't the gap from earlier the week. This is the daily. So this gap, I'm sorry, was back in November. I misspoke. This is the gap from earlier this week. This was just 3 days ago. Yeah, I'm sorry, I misspoke. And then here's this tiny little gap. There is a gap. That's from this morning, right here. And that will get filled. Probably could get filled later today, could get filled today in the same, on the same bar, or it could get filled, most likely on Tuesday, Wednesday of next week. And this gap could get challenged. We may not get into that gap until next week. And I will have I will have um, misplayed the call, right? Um, and I could have punted. I could have just said, okay, well, I'll just let the strategy just play either way, and I would have been better off. It's usually the case, but I try to get too cute. That makes sense? Now these folks that are making, like these projections and comparisons to 1929, you see these charts and everything else. I would take all that with an absolute grain of salt, especially trend lines. It isn't the same. It's not 1929. 1929 was 1929. 1987 was 1987. It isn't the same. It's not the same market. It's not the same rules. It's not the same technology. So much more money. So anyone looking at a chart and saying, oh, it's got the same pattern that it held in 1929, there might be some repeat of behavior, but just to draw any market correlations to that, I think personally is nonsense. And I wouldn't trade any of it, and I wouldn't suggest you guys do it either. If you're seeing that, and I'm starting to see stuff like that, and um, mm-mm. If you want to see something really wild, um, we can do this. Let me do this while we're waiting on this. See if I can get in here and do this. Customize. I want to show you something. I'm going to put this on. How about the NASDAQ? Is that okay? I want to show you something. And we're going to go back. We're going to go on a monthly and we're going to go 30 years ago. If I can go back that far. Now, some of these we didn't even have futures contracts back then, but let's see what we can get here. And I'm not, no, excuse me, not a monthly. I'm going to go with a line break. I'm not going to give you an in-service on line breaks, but I am going to I'm going to set this on a monthly view. I'm going to set this on 30 years. It's going to blow your mind. Yeah, we're gonna let that populate. I love line breaks. I love them intraday too. And we have systems to trade line breaks. It's a price chart. See if that's going to come up. I hope so. It's slow there. We're going back 30 years. Did I set it for a monthly? I think I did. Oh, it's taking a long time, huh? Now, if I did that on like a 5 minute, I'm going to overload my computer. Let me just take a peek at this. Where did I go here? Shoot. Um, Dang it. I think I did a monthly settings. We gotta let that populate. Gonna go back 30 years on the NASDAQ on a monthly view and on line break. It'll make you puke. We'll give it a minute or two. Okay, I made a mistake. That's tick. That's wrong. I want monthly. That was gonna take us like all day. Sorry, computer. 30 years back, monthly line break. I made a mistake. Here it comes. There it is. That's what we wanted. All right, so check this out. This is a monthly line break of the NASDAQ. Now, I don't have time to explain how line break works. You can certainly look it up, but and we have a number of systems to trade this on any interval, right down to a tick level, intraday and everything, right? But that's not what I want to show you. What I want to show you on a quiet Friday afternoon here, as everyone's trying to, this is so clear. Um, this area here, let me get a marker. Do you see this right here? You know what that is? That's the dot com. That's the dot com crash. And that was a pretty good crash, but that's the dot com. Now, down here, um, no, it's over here. I'll tell you later. But all right, so this is the dot com, and then, and I'll even click on it. So you probably don't believe me. This is, see the year? That is January, February, March of 2000, right? March of 2000. And it just started selling. And it was just, it just started. And it just, on a monthly basis, and it just never stopped. One, two, three, four, five, six, seven, eight, nine. 9 months later, straight down. We weren't in it. It's just like, man, this shit's getting cheap. Everyone got taken out. The dot com. There were people, I want you to know, there were traders before you. Yeah, they were. They're probably long gone. They could be in the ground. I can remember there was a guy in Clearwater. I used to hear him on the radio, and he would call the same. There was a guy on the radio. They would call in for investors, and they'd be like, "How's this stock look, Tommy?" Oh, and every time was AOL. That's all the guy wanted to talk about was AOL. I'm never saying selling America Online. They're great. They're gonna do this. There's Steve Casey. He's gonna buy this. He's gonna buy that. They're gonna take over the world. No, they didn't. No, I hope he got out. He got out at some point, because they went to nothing. they bought Time Warner and stuff. When they started acquiring other shit, they can't grow organically. But so there were all kinds of bubbles in here, right? But that was the run up, right? We could go further back. Now we were, we've been doing this, for a while, long before the dot com. So then we come out. By the way, you're talking about the Qs selling down here, the QQQs for like, I don't know, $15 share or so. And then here is the run up. Now, this is what's crazy. This is 2002, right? Now, I thought right in here in the fall, is this 2001? I was right in here. Let's see, 2001. There it is, right there. In September, August, September of 2001. And it was at that point that I'm trying, yeah, it was, God, it's amazing just to think back. And Susie and I were on a trip when we were out in California, and we flew into San Francisco, and we were doing the whole coast thing, and we were driving around, and we were going to drive. I always wanted to see the Hearst Castle and play some golf out there, and Susie wanted to go horseback. We had a beautiful trip planned, and we're a few days into the trip. But when I tell the story, we had time, and so we just got a piece of paper. I said, Susie, you write down 5 locations you want to go. I'll write down 5 locations, and we happen to, we agree on which one we're going to go. Let's make it fun. So Susan picked 5 places that she wanted to go. I picked five, and um, I think Susan said New York. I think I said California, and then I think like the second place was something else. Or Susie, I picked California. I know that, and Susie picked New York. And then, but her second choice was California, and then like my third choice was like New York, but it was someplace else, right? We thought we want to go someplace that we've never been. Not that we've never been to New York, but just to go and have a good time. And and we settled on California, and we were out there for, and I can remember talking, and it's like we were just relaxing, just having a good time, um and 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 this is what had been going on, right? But we're out of it, right? And Sue's like, so what do you think? And I said, I think it's over. I think Bush is coming in. I think we're going to be all right. I think this is the time to start getting reinvested again. And um and it's just crazy. But we were out to dinner one night, and I was telling Susan I like to talk politics, and I was always paying attention. I said, Susie, I was explaining how this leader of the Mujahideen got assassinated. That's what I'm talking to Susan about, right? About dinner. And I said, okay. And so like the next day we're going over the Golden Gate. It's like, oh, this is really eerie. I wouldn't want anything to happen as we go over the Golden Gate. And I don't know, we didn't verbalize it, but that day was September 10th. That day was September 10th of 2001. And we woke up the next morning. We were supposed to be going to the Hearst Castle. And Susan, we were on, still a little bit of jet lag, so I was still in bed actually. And Susan woke me up and said, Donnie, something just happened in New York. And I got it on the TV. And I don't know, I don't know if this is real or not, but something's going on. And I wake up and I'm like, oh shit. And that was September 11th. And I'm like, oh man. I'm like, yeah, kid, it's real. And I look at the clocks, and it would have been, mm, I don't know, maybe 9:45 or something, 10 o'clock maybe Eastern Standard Time. It was still early out there. And I immediately called the broker. I did get through, and we still had a couple of things, couple of positions. And he's like, Don, it's too late anyways. And I wanted to even buy some stuff. That was, so I immediately was thinking the market too. I was thinking everything else. I mean, it's like God, but he's like, the market's closed. I'm like, what do you mean it's closed? It's closed. And it was closed for 5 days. And then I just said to Susie, I said, Susie, we got to remember this. I mean, the world has just changed. It's not going to be the same world. By the way, we never did get to see the Hearst Castle. But when we got back, 5 days later, the market opened and I came in so very, very hard. I came in really hard into the market. Um, maybe a generational buy. I thought it was. And, we took a little bit of heat. Um, but I bought it very, very hard. I bought the QQQs, quite a bit of them, for about 19 bucks a share. And I want you to know, I rode those Qs, into here. Can you imagine that? And those Qs, and I was happy to do this, right? I think I sold them. You ready for this? I think I sold them for like 26 bucks. I think about 3 years, 3, 4 years. Oh my God. And then we start to think, Jesus, we got a real estate bubble. So what is this? This this is the mother of all crashes. That's what this is. This is '08. 1, 2, 3, 4, 5, 6 months. That's it. This little this little nothing. There's a nothing burger. I'm sorry if you get hurt. Wouldn't be to you if you get hurt. It's a real something. But that's the mother of all crashes. And then what's this? This is March. Let me get a marker on it. This is March. This is what I was talking about the other day. This is well, it says April, but it actually started intraday. It started in March of '09. This is where they launched QE, they launched all kinds of stuff, all kinds of stuff. It was loaded and quantitative. Then we dip. And what's this? So this was they launched it here. They did all the TARP stuff, and I want to say this is QE1. This is QE2, where they're buying the bonds. This is QE3. This is QE4. This, now they were limited to how many bonds they could buy. So then they did here, this is Operation Twist, first created by JFK in the 60s. But they're like, hey, we can pull that out. And so what they do is they swap the short-term bonds for the long-term bonds so they can buy more short-term bonds and then we launch again. And then what's this? You ask. This is COVID. This is COVID. Now, we were ready to go before COVID, right? This is December of 2021. I mean, how much further were we going to do this? So is this really COVID or was COVID just a cover, just an excuse? Because we were ready to go. I mean, we were overdue, right? So 1, 2, 3, 4, 5, 6, 7 months. And then what did they do? And by the way, they were jacking interest rates up here. They were trying to pull it back, but they didn't get blamed. They blamed COVID. And then we get down here, what do? They launch another QE. They start buying bonds again. But they made a mistake. What was the mistake? This time, the politicians said, we need to send money, and they told everybody to stay home. You don't have to work anymore. Just stay home. And all the young people, some of them are still home. They just told them, you don't have to work. Don't worry about it. And we'll send you checks. So they launched QE again, the bond buying. That inflated the assets. Now, we never had much inflation, really. We had asset inflation, huge wealth disparity, because the billionaires are getting billions, but the people aren't. But now they gave the people money in their pocket. Stay home and, and gave them money. And they started doing all kinds of things. I heard about it from my neighbors. They were joining boating clubs. They were joining camping clubs. They were, just buying trailers. They were buying second properties. It was great, right? but it created, and then we launch again straight up. And this is where we are today at 21,600. Now, I don't know. This is a monthly chart. We might keep going. We might. We'll see it here on a monthly basis. Hasn't started yet. But you got to be careful about guessing on it because, you could have guessed here, guessed here, and guessed here. And then, we're going to get the first leg. The way this will unfold, though I can map out for you the psychology of how the bubble unfolds. I won't take the time to show you others, but I can show you the psychology of what it'll look like. This isn't it. This was just, a feint. Um, but I mean, isn't this absurd? I mean, from here to here, you could have bought the QQQs. I did buy the QQQs at $19. The QQQs are selling what for 355 or something? You know, would have, could have, should have. Oh, well, Don, you should have been a buy and holder. Yeah, looking back on it, I guess I should have been a buy and holder. But yeah. I mean, what if you bought them all here and took a 30% haircut? Well, then you just ride it back up. Oh, okay. Is it going to do that forever and ever and ever? I don't think so. I don't think so. But it might, if they found the the fountain of youth here, that there's never a day of reckoning. Maybe, maybe. But this is, and I'm just sharing this as perspective. This is a monthly basis. Yeah, monthly. So how does a bubble unfold? What does it look like? Good to see you, Sil. I hope everything's going well. You keep me posted, so don't hesitate to send me any questions on email. We're going to go through all your questions, so when we're together. Sil reserved his spot in the Q School and is going through the on-demand videos right now. And you can let us know how that's going. And then in February, Sil and I will be together for 3 weeks. We're going to answer all his questions. We're going to send him. He's on TradeStation. We're going to be sending him software, and we'll be into the thick of it. So um, you're very welcome. So how will this look? The way this will unfold. I'm not saying it's going to unfold this month or next month, but this is the way it will unfold psychologically. And I'll be able to point to this. And, by the way, there's a book on bubbles called The Madness of Crowds. It was written like, 80 years ago. And if you haven't read it, you want to read it. It's called The Madness of Crowds. The South Seas. There's a history of this sort of thing. So let me get a marker. And what will happen is, it could be, let's say it's from here, right? So she'll turn, we'll get a big red candle and down will come. Will come down. And what'll happen is, and it'll be very, very sharp, just like this one. But we probably won't get anywhere close to that, right? And you're going to have the same thing happen here that happened here. And what is that thing? You had people come in here and buy this that never bought or never got involved in the market here. And they will buy it. And they will all be geniuses. And they'll all want to tell you how rich they are. And they will do the same thing here. It's just a dip. And technically it will be. And then the market will do this. And it'll come up. And this will be the high, just as it was here. But this high got taken out, right? Right here, right? But this high, that when the bubble gets ready to go, measured in months, so it could really take some time, right? It could be the second year of Trump. This is on a monthly basis, but it won't get taken out. And then we'll roll again, and then that'll be it. And then we'll come down and we'll take out that, and it will be over very, very quickly. How far will it go? Well, we have a pretty good idea. And let's use our Fibonacci's for that. Fibonacci price retracement lines. We're going to go to the obvious low, which is down here, right? Because these are all dips. Dip, one dip, 2, 3, 4, 5, 6. I don't care on any chart. I think March 5th. I'd be inclined to think this starts around March 5th, but we'll see. Still thinks maybe March 20th. Um, Whenever you have a chart that dips 6 times, you got to know you are on borrowed time on any time frame, 5 minute, 10 minute, but certainly on a monthly. But this is the obvious low. We take up the Fibonacci up to where we are now, which is the obvious high, which is where we are on the monthly high. Now, we haven't done this yet, but what do we know? We do know that most moves will retrace on average 50%, which would be right here. That one. Let me see if I can edit. I'll make it fatter. Can I increase the weight? I meant to increase the weight of that. You can see it. There it is. And I'll increase the font so you can see it. I didn't expect to do this, but it's kind of fun, right? You know, you don't do it. It's not something you do every day. Um, Edit, let's see, edit. And I want to increase the font so you can see it. There it is. And let's increase the font to 16 maybe. There it is. So the likely pullback will be 12,270. That's in the cards here. So if you have an IRA account in here, you have to really sit down at the kitchen table and say, okay, honey, um, this is where we are. We've had some really, really nice profits. We're in here. But you have to realize that over the next 1, 2 years, um, our account could take a 50% haircut. I'm not saying it will, but it could. And you individually have to decide whether or not you want to do that or not. That's what I did with Susan in, the early 2000s. I'm like, are you ready for that? She's like, hell no. I'm like, okay, I could have been, but no, Susan, no way. No way. That ain't happening, Don. Don't let that happen. So, okay, I got to get out. And we got to go. And then what are we going to do? Well, we're going to have to trade. Okay. That's how it started. The challenge will be this is how do we get here? Do we get here over months and months and months? Or is there an event? Does it happen quickly? Because I got to tell you something, when we get here, the people in the US are going to be screaming. They're going to be screaming. And I'm talking about the rich people, not the poor people. Poor people don't own this stuff, but they're going to be screaming because real estate's going to be coming down, crypto's going to be coming down, everything's going to be coming down. And what they're going to start doing is they're going to start selling everything. This is why I think that there could be a bullish case made for the dollar because they're going to need dollars because they got a lot of debt themselves. And they're going to be selling anything that isn't tied down. And they're going to want dollars. Everyone's going to want dollars near term. And they will sell everything. And if we break this area, they could do what they usually do. They panic because, see, they have no idea of what you know. They have no idea what they bought. They have no idea what they're doing. They just in because it's going up. And as long as it's going up, they're going to stay in. And the feds and everybody know that. But when this sort of thing happens, and if there's an event around this that scares them and they panic here, then we come down 10,000, maybe 7,000. Maybe we come down the whole goddamn thing. And I'm going to tell you something. I was talking to my brother up here when the NASDAQ was at 5,000. I remember. And I had AOL, by the way, you know, and I was talking to him I remember through the chat function of AOL. And I said, hey, brother, got an older brother. I say, brother, I said, we got a gap on the NASDAQ down at 900. And you know what he said to me? Oh, Jesus, brother, don't tell me that. I said, no, we do, Mike. I go, we got a gap down there. And I'm like, no, we didn't like that. I'm like, okay, okay, we gotta, I said, we've been playing. Now we had been playing this for a long time, right? We had been playing that, all the way through the 90s. But the problem was, as we get up here, everybody was just piling in. When everyone is piling in, those little hairs on the back of your neck have got to stand up, folks. They're put there for a reason, right? I'm just telling you. Are you reading about, they were talking about it, Sosnoff was talking about it last night on the same conversation. The gentleman who was hosting as a gentleman was talking about all the short funds that are just closing their doors. Well, that should be a marker. They're capitulating. They're like, screw it. Why do you want to short it, right? Why do you want to get any puts? You don't want to buy any puts. You don't want to buy any put, but that's them. Those are funds, by the way, that are giving up on the shorting. Us as traders, you don't want to give up on shorting. That would be a mistake, right? But funds that short, that's probably a hard way to go. It's hard to collect money. It's hard to nail these things, and that's a different game, but not for us, right? Not for you. So I would not give up on shorting. But trying to nail something like this could be, very difficult. But I want you to know in advance, you'll come back and see this. But that's what your risk. So anyone getting involved, there are folks that never got involved in any of this, and they just, honey, I think we need to get involved in the Nasdaq because it never goes down, and it's going to go to 30,000, and we're going to go, whatever, and they get involved. Okay, but that's what it looks like. Isn't that crazy? Now, let me show you some bubbles. Keep that in mind. Um, Let me clear all that. But oh, by the way, when we get down here and we do it, they're going to do the same thing that they always do, right? Now, the dollar might be a buck 20, might be a buck 30 at that point. Who knows? And what are you going to want to do? Sell dollars and maybe buy euros, you know, buy other currency, get out of your dollars and buy risk assets. It'll be the same program. It's the only game in town. It's interest rates. It's basically a function of interest rates. And by the way, when we're down here, the interest rates were at, like at four, here they were like at 4%. And then as we went down, they get down to 3%, 2%, then they got at 1%, and then they locked them down and the whole ride up. 10-year treasuries were yielding like, less than 1%. Well, we're up here. The 10-year treasury is yielding, like what somewhere, we could go look exactly somewhere between 4 and 5%. Or what? Why do you want to take on so much risk when the market only returns at best on average maybe 10%, so you can get 5% safely? You're going to risk this to get another 5%, then guess what? You deserve to get smoked. That would be my answer. And they do, and they will. But, you know, the meek shall inherit the earth. I mean, it's what makes up a market. So, but isn't that, I mean, I just think that is just mind-blowing to me. You ever see those pictures of the girl, she's sitting in the little pool of water above that big, big river in Africa. Name of that river, I forget. It's like the highest waterfall, and she's, in a little pool of water. You know what? When you're 20, 21, you're invincible. When you're 25, 30, you're the smartest guy in the room. Um, you know, I'm not. I'm not that smart. I'm not the smartest guy in the room, right? But I want to be a survivor. You know, that was also too the other thing. You might want to hear Sazanov's comments last night. He goes, "You got to live to play another day. You got to survive this. It's about survival. It's okay to play for the middle. It's okay to miss some. It's okay to get some wrong. You're not trying to pick the top. You want to be here, 2 months from now, 2 years from now, 10 years from now. But you'll come back and laugh at this. You say, I remember that guy he was talking. Yeah, it'll be a hoot. It'll just be a blast. Um, Let me show you something. I'm going to clear all this writing if you don't mind, and then I'm going to get out of your way. Um, It's just, and you can do the same thing with the S&P, right? So Nasdaq's a little more fun, but the S&P is the same thing. Same exact thing. I mean, so just, think about this. This was, the worst thing in the world that happened, '08. Oh, okay. Mhm. This one was, they ended this one so fast. But the problem is they're happening deeper and faster than ever because of technology. They'll be extremely fast. I mean, we could have one, we're down here like, in a month. It happened very, very fast. And when the selling starts, man, it's a beautiful thing. Um, what I'm going to, I want to remove the Fibonacci. So let me see if I can do this. Let's see, edit. Let's see. No, it's a drawing tool. Um, how do I get rid of it here? Sorry. There's a removal here. Maybe I got to go up here so I can see it. Here it is. Remove the Fibonacci's. All right. So let's think about some other markets that have had some bubble-like features to them. How about Bitcoin? Oops. Now, Bitcoin hasn't been around long enough for us to put it on a monthly. So we're going to need to do this with a weekly view, but you're going to get a really good look at this. And so we go to the time frame, customize, and we're going to go to line break. We're going to change this to Bitcoin at BTC. And we'll go, yeah, we can go 20 years back. Hasn't been around that long. It's not going to go that far because, and this is a futures contract, so I think I can only go like 10 years back if, but you'll get an idea. There it is. To his Bitcoin. So bubble-like behavior hasn't completed yet, has not. Um, but similar. So here's the smart money and the accumulation, and then here is that ramp. And then here's the shakeout. This is where Dave Portnoy bought, and then we dip down again, just a pullback, right? Just a pullback, and then it runs, and then he pukes it out. Dave Portnoy, he pukes it out. He gets scared. He gets out, and then he buys it again, right? Because he wants to be able to tell everybody in Miami and the hoi polloi that I own Bitcoin, and he buys up here, and then it crashes out, and it takes that out. And he sells again down here, loses his ass, and then we have these jogs, and we do this, and then we ramp like crazy, right? We get another shakeout, and Dave Portnoy is buying it again up here. Now it could continue, but what's going to happen is, we're going to ultimately, I mean, you can believe what you want to believe. I don't know what it's going to, but it's going to go to wherever it's going to go, right? But you have to understand you're going to get these shakes. And she might dip and keep on going. She might, but ultimately, Bitcoin will end the same way all the bubbles end, and the crocodile tears will be brutal. And they get them all. They get them all because in bubbles, and you can make a ton of money in bubbles, but the key is to get out. And they're not telling them to get out. They're telling them to hodl. They're getting out. This is where they, get out, make a ton of money, and then go buy their boats and go buy their homes and buy their planes, and they're getting rich. They're only getting rich. You only have to get rich once, and that's what they do. So bubbles are a great way to make money, but they're not that very, very dangerous, especially for the average person. To try to hodl and put all your apples into one basket like that, especially on something like this, highly, highly speculative. You want to put a little bit of some, okay, I get it, but that's not what people are doing because, and I'll end with this. I remember, and I put out a notice on this, and you remember the apes, right, that were buying AMC and GameStop and all that. And And I saw a YouTube video of a woman, and she was paddling a canoe around a lake in North Carolina. And it was sad to me because she's telling her young son, and she was a lady probably about 40, 45, and she's telling her young son, honey, do you see that beautiful summer home over there on the point? Well, Mama just put all our retirement money into AMC, and one day soon that home is going to be ours. And I'm thinking, my God. And I think she did that when AMC was at about $45 a share, right? Let's go look at AMC. We'll go see where it is. Um, I gotta go back over here. And let's see. Maybe it's had a bounce. I think it's had a bounce, but we'll see. Maybe she's made it. I hope she has. Um, should we do it on a monthly? I think we should do it on a monthly AMC. It's a theater company. They changed the flavor of their popcorn. All right. So this is like 10 years ago. This is yeah, split adjusted, so I don't know. She bought it, someplace in here. I mean, look, that awful. So we can see the manifestations of a bubble. Let me put it into a weekly and you'll see the behavior and the psychology behind. So if I can describe to you the psychology of the bubble and how it unfolds, when it unfolds, and if you read that book, and I strongly suggest everybody read that book, The Madness of Crowds, you'll have an appreciation. So here it is, and then here's the ramp, and then here's then they think, okay, now I'm going to get in. This is, Roaring Kitty was getting in here, or whatever it was. That's actually Game Sunk. We'll look at that one. But, she's dead. She put her entire IRA money into GameStunk somewheres at $45 a share, you know, ridiculous, thinking it's going to do that again, and she's now been wiped out. And the kid's education is gone. Let's look at GameStunk. That'll be the last one. And you can do this yourself. And and it just happens over and over and over again. And people don't know, they don't learn the lessons, and they think they're the smartest guy. And I'm not the smartest guy, but I know they're not either, right? And they should, you know, you want to know what you don't know, and then you want to be humble enough to say, hey, maybe I'm not the smartest guy. Maybe you'd be all right. So here is GameStunk, and same type of thing. And it did nothing, came out of nothing, and then split adjusted does that, and we're here, and they're doing the same thing. It's at $27. It could be a little trading vehicle or something, but it's not going back up there. It's going to zero. It's going to ultimately go bankrupt. But they're in there, but there are people, pouring their entire money, everything into, GameStop, on a hope and a wing and a prayer that, it's going to go back up and they're going to be the next roaring kitty and they're going to make millions. And that's what they do. And they just go to zero. This doesn't show the psychology of it. If you put it on a daily, you could, but, the market is replete with this sort of thing. And, so word to the wise. And in the meantime, let's slide back to our little gig here. And what do we see? Now the strategy just, went long and, stubbornly, hasn't gone. But we do have a new higher range. We got a gap here and we're currently dipping here in the 5 minutes. So I'm going to shut up and I got some things that I need to catch up on. And you know what? I'll tell you what, let's see if we can catch, a little bit of a short. Maybe we can get a little short in here. Don't normally do this. I don't. Hey, this Daniel, did you hear about the cult-like following on Bed Bath and Beyond? Do they got one now? They got one going? A whole group leaving the stock would skyrocket because of the new CEO that was in another mania stock that pumped like crazy. Well, there you go. Yeah. See, I don't even know, but I tell you what. So let's go. What is the symbol, Daniel? Thanks for bringing it up. Is it BBB, Bed Bath and Beyond? Let's go look at it. Let's go have some fun. So Daniel writes to us. Daniel is a new monthly member. He's from Norway. And you don't have to put your full name there, but that's up to you. But did you hear about the cult-like following on Bed Bath and Beyond? A whole group believing that the stock would skyrocket because of a new CEO that was in another mania. B, and Y. All right, let's have some fun. Let's look at this thing. So first thing is, this is what I want to do. I want to copy the radar. All right. So thanks for asking. Copy window. Let's go over here and look at this thing. Um, let's see if I can do this here. Let's see. Can I? Oh, I got this chart in here. Let me do a new one. Let me see if I can do this. Yep. So we're going to paste the radar in here, and let's remove the VIX. Let's remove that. All right, let's look at BBY. And let's look at it on not on a no, it's another B. That's Bed Bath. Oops, sorry. Bed Bath and Beyond. I think right, BBY? Is that right? Maybe you had it right. Let me look. I should know, right? My wife. Does it get three? I don't think it has three B's. I think it's BBY. BBY. Nope, that's Best Buy. Why don't I have it? Bed, Bath, and Beyond. BBY. Let's try that again. Hmm. I think that is a symbol. Why don't I have the feed for that? Is it is it trading on the pink sheets? It may have been delisted and maybe trading on the pink sheets, what we call the pink sheets, penny stocks. I think, let me go look. If that's the case, you don't want to go near it. That's classic pump and dump. Let me go look. Don't go near it. Yeah, it's trading on the pink sheets. It's been delisted. I wouldn't go near it. It's trading on the pink sheets, penny stocks, and the penny stocks. Yeah. So what it is, people think like, okay, I can buy 1,000 shares, and it's just go to zero. I wouldn't even waste my time. I wouldn't. Thanks for bringing it to our attention, but don't go near it. Delisted. Yeah, they went bankrupt. They delisted. They're trading on the pink sheets, and they just those are pump and dump houses. Um, did you see the movie? It's great. Great movie. What was the movie with well, you had Wall Street One. What was the one where the guy had the boat and he had the pretty blonde girlfriend and stuff? What was the name of that movie? Um, he was he worked for a pump and dump shop up in New York. He's a nice guy. I kind of I like him. It was a great story, great movie. I can't think of the name of it. Is it Wall Street? No, it wasn't Wall Street. Um, can't think of the name of it. Remember he had a drug problem, to say the least, and he made a ton. And they made it off the pink sheets, but they were pumping and dumping the stuff. That's what they did. And I knew people that were buying those stocks and stuff. I never did, but I can't even think of his name. If you haven't seen it, you want to. Great movie. And it's true, it's a true story. Whoops, what did I do here? Uh-oh. Did I goof this up? There we go. All right. There we go. Mm, did it again. A boiler room. What is a boiler room? A boiler room, um, mostly in New York, probably in Chicago, and they'll fill it with a bunch of ex-jocks and stuff and guys that probably don't have the pedigree to go to work for a legitimate the hoi polloi firms, the Goldman Sachs of the world. and they'll get funded and they'll go to work and it could be, it'll be off Broadway or off Wall Street and they'll just be a bank of phones. And these guys are just, they're just calling people at random around the country. And that's what they'll do. They'll say, "Hey, did you hear about, Bed Bath and Beyond? I'm with such and such. I'm going to get you in on the ground floor. I mean, you could buy 1,000 shares just for a thing. And this guy, and they'll tell him a story and they'll get some guy in Paducah, Kentucky, to send them, 30,000 and they will all be working it like crazy trying to get Bed Bath and Beyond to go from 7 cents to like 15 cents and they probably then they'll have some other benefactor who has been accumulating the shares at a nickel or something and then he'll pull the plug and dump and Bed Bath and Beyond will go to a penny a share and they just pump and dump and they do it when they call the penny stocks in the pink sheets and it's kind of it's people who don't really have the money to lose and have no sophistication, don't know, and they get enticed to it because they can buy a lot of shares and they think that's going to get them something and it's going to get them nothing. And that's what they do. They call them boiler rooms, but they got boiler rooms not just to sell stock or penny stocks. They got boiler rooms to sell all kinds of shit, annuities and stuff like that. And they just calling, millions of people and trying to sell them, snake oil. It's gross. It's gross. I'm the first person to say you should be skeptical. You should be skeptical of our tools. Should be skeptical of everything. I don't have a problem with that. And that's the whole idea behind the 3 weeks, is to be skeptical. So when we're together, we're going to be sending you the tools and you're going to be, using them and we're going to try to help you get the best outcome you have and then you're going to you'll go from there um which will be ample opportunity for you to to get it figured out one way or the other, right? um but I'm optimistic with everybody you're going to do just fine, but you'll know. um what else was I going to say? But thank you, Daniel. Thank you. I hope you don't have money in it. I hope you don't. And they're probably now calling all over the world to do this, right? Too. So the world's gotten a lot smaller. And what do we got here? So the 5 minute does what? It goes long again. And we can program that to take the re-entries. I'm not taking them, I'm just not. And we may not get another trade here. Well, um, let's it's 12:14. I'm gonna have to break away from the chat function. I'm gonna leave this view up for a little bit here. It's a Friday afternoon, and I generally don't do any trading, so we, finish the week, rather a modest week for me. Um, Not a very, a respectable, but an okay profit factor, but um, I'm okay, and we'll have another week at it. I say Susie's um, had to get a brace and is on crutches right now, and so we're working together. She's gonna be fine. But late last week, uh, the young dog pulled Susan down. So that's kind of where we are. No money in it. Just watch the video and the crazy fans. Okay, yeah, yeah. And they are that stuff is crazy. And before Reddit and before these other places, I do want you to know, um, they they used to be like the Yahoo message boards and stuff, right? And people would be, ranting and raving and stuff like that. You know, if you want to read it and stuff, at least you'll have the tools, I hope, one day, Daniel, and if you hear something like that. I mean, if you so for instance, like now we didn't play in GameStunk, but if you had heard about Roaring Kitty doing something with GME, GameStunk, um, if you and we did this, like we went back, that stock ran in 3 months, went crazy. So, but when he came out with that, if you had plugged it into the radar, it actually still would have been a short and would have been a rip. But so I wouldn't have bought it, right? If I was tempted to buy it, I wouldn't have bought it. I would have watched it and I wouldn't have paid attention to him. But if I knew he was pumping it, like, okay, this guy's pumping it, they're all pumping it, just kind of what you heard. And then about 3 or 4 days later, GameStop goes long. And then it never looked back. It went long at like $4.25 off of Swing Machine. I think he was pumping it like at 380. If you had put $10,000 into GameStop at that time, and I think it was like in September of that year, whatever year that was, now it's a few years back, in December, it would have been worth about a $500,000, 10 grand. But the thing is, um, at least you would have had the tools to filter it out. You would have had the tools to manage it. And who cares where it comes from? But if you think you're gonna, just willy-nilly just, pick, these $3 or $4 stocks and take them from a $10,000 investment to a 500,000, that's just not, that's such a crazy outlier that's, like once in a lifetime type of trade. I mean, they don't have, I mean, I remember we had some crazy trades, right? But there's so few that, I remember in detail every single one. It's not an every month or every year type of thing, but they can be had. It's just that I think you want to have some um view to get an objective view, right? I've got to break away. I'm going to let you watch. Swing Machine is only taking shorts, so guess what? We haven't had but one trade on the wee hours, and because Bagger, was a shitty coach today, and I didn't put it on the long, we're not in that 335 trade. Had I been, we'd be up 6 grand, and guess what? We'd be out of here. Now, would I have all six? Maybe not. Maybe I would have got four or five, but I didn't do it, and that's okay, right? Maybe you would have. Um, hearing from some members that did get a piece of it anyways. I've got to break away. I'll be back. Hi everyone, it's Don, and just not a lot going on, right? It's a long trade. The beautiful thing about Swing Machine and this particular strategy, and we're not hawking, we're not one tool, right? We have other tools, but I do love Swing Machine, right? So I gotta have, and I think you would too. You'll have other tools to choose from, but it's really great to have it there, and you can see what you can see. And we've been long since 335, and it's long. And there haven't been any other trades, to pick off. Now, you want to get in there and try to force something or try to, uh, you know, that's different. I mean, we could have come in, there were a couple of other opportunities. I mean, the trade went long down here, but you could have bought it in here, made a little, you could have bought it maybe in here, a little pressure, buy the dip. You could have bought this one, and you certainly could have bought this one, and you could have bought that one. You could have. I just didn't want to be that active. I'm a little lazy. I have this at our fingertips. I have it all the time, and I can wait. What's really, really nice about Swing Machine, though, not only is it helpful in keeping you in, right? You want to stay in. So, like on this trade here, if you get in at 335, and if at 435 you take $1,000, okay, you took your $1,000, but you know you don't have a safe, you may not, you're going to be less safe coming in, and you're not going to make the seven. So that's lost opportunity. That's kind of why we, frown upon, trying to always, every once in a while, you can exercise, take the money, but not, you don't want to be doing it all the time. Because I want you to have some of these, right? Even though we're not in this one, we're not. But so Swing Machine can help you in these tools. We have other tools as well. They can help you stay in a trade, they can, and they can also help you stay out of a trade. So notice down in here, I probably should have put this in writing. I said Swing Machine Plus is only taking shorts. Well, I programmed it that way, and did that last night. Well, guess what, coach? You know, um, that's not that's not how they're playing today. We didn't get much. We got one little short in here last night, and that's what it made. And then it went long, and there hasn't been another short. And it happens. I now in hindsight, I would have been better. I would have been better to have let it play long, maybe long and short, or maybe you decided, you know what, Don, Nicholas is long. I'm only going to play it to the long side. Well, then you would have been just doing that. So it's not possible to play a perfect round of golf. It's not possible to play a perfect soccer game, a perfect football game, a perfect hockey game. It's not, you know, you know, it is possible to have a really perfect trading day. You will have them, but not every single day. And the thing of it is, you don't have to. You don't have to. So it's a kind of a, um, but these other tools that are here, the swing, the ball marker, and we can do other things. We got other tools. We have, I could put a bunch of tools up here, but I don't put them on the screen, especially on YouTube. Again, we're just trying to create awareness, but what we're not doing is putting on a whole bunch of information that, that gets people to begin to see things that aren't necessarily there, or getting, just a little bit over their skis and trading too much too frequently. I will say this, if you haven't noticed though, this is the GPS near. Do you notice this momentum, right? This guy. And notice here, I don't know if we're going to get it still, but that was a lot of momentum on that run, a whole lot. And notice we're going right back up here, right? To where they rejected it. And look where we are. We got a little bit more than here, but not that much. Not that much. We got some divergence. So I'm not suggesting that you rush in and short that. That wouldn't, I'm not going to do that. Nah, I'm not going to do that. And, but the problem is, see, even here though, this is the distant momentum and it's still pretty strong. It's pretty strong. So I'm not even sure we're even going to get another short trade, and it's about 120. And I get news fire. We don't get this short trade by 2:30. If we don't, you know what? I'm just gonna say, okay, the week is the week, and it was a modest week for me, rather, substandard profit factor of about 1.8. It is what it is. Um, and I can make all kinds of excuses, but I'm not going to do that, right? I'm just not. So, and so we'll erase that. And, pretty soon I very well may do that because, I don't want to, you know, there's, we used to go skiing and I'd be like, oh man, it would get to be like maybe 3:15, 3:30. I'd say to Susie, hey, let's make one more run. So about, nah, no, let's not do that. Like, why not? No, let's go to the clubhouse, the ski shop, ski, the chalet. And because it's that last run of the day, the sun is setting, 4 o'clock, quarter of four out there, maybe 4 o'clock, and you're tired. And that would be, skiers would say that's the one you get hurt on. And you don't want to go into you don't want to finish your day on a bad fall or a sprain or something. And so be like, yeah, you're right. Let's go in and have a hot chocolate and call it a day and hit the hot tub. So same thing with golf. You had a really good round. You're going into number 18. Are you really going to try to get on a par five and two, and hit it over the water and finish with a triple? Do you really want to do that? Not me. I'm probably going to lay it out, try to get on the green in regulation, give myself a shot at birdie, maybe at worst par, and get to the pro shop and play another day. So, and that's what we do, right? That's a sports metaphor, a sports mentality. If you played sports, you can relate it to, whatever you got to do. We try to relate it to something that's fun. Sports are fun to me. I love sports and I always have. And so we still do. And trading to me, that's why I enjoy it so much. It's kind of like a sport, a sporting event. Um, it's just, you just don't work up a real big aerobic workout. At least you shouldn't be. All right. So if I turn it off, I'll let you know. Let's see what it does up here. But what you don't want to be doing, and people do this like with the Fibonacci's and stuff, they'll draw the Fibonacci's and then like as soon as it hits the Fibonacci, they'll buy or sell it. Um, and trading it in isolation. It's fine to use a Fibonacci occasionally, but just to trade them willy-nilly, I think that sort of thing will catch up to you. Moving averages will too. But any case, that's where we be. I hope you've had a good day. I hope you had a good week. Um, we've been on a lot. Next week I won't be able to do this. I just can't. And This week I had maybe a little more time on YouTube than did in, but really not enough time on the trading, because we had some personal challenges this week, and that's fine. Um, and nothing major or anything of the sort, but had some other responsibilities. Um, but So here we be. If anyone wants to look at anything in particular, you get any questions, let me know. I'll come back before we turn down. Um, and Good to see Sil. Sil, looking forward to the weeks together. Daniel, good to see you. And and if there's anyone else coming by and that's new, be sure to visit the site. Take your time, watch the videos, think about it. If it resonates with you and you still have questions, you want to call, I'm happy to do it. I'll talk to you very, very frankly, very candidly. I want everyone to make the best decision at every stage of their membership level. And it's incremental. The membership is incremental. We slow it down on purpose so that you can make the best decision and kind of ease into things and see what this is and what it's all about. When you're in Q School, you get a Zoom feed. You get your own Zoom feed, and we change the view. We change the view every few days, and we send you some of the same tools. And and we want you, learning them and getting exposed to them so that you can, in a live environment, get your feet wet and to be able to ask us questions in a live environment. Maybe not on every single trade per se, but on every single day. And the market will be the market. All right. I will just punch up. I'm kind of curious. Where is the Nasdaq on a daily? So let's look at this. Where is this bugger? Okay, it's only at 60, so the market could go much higher. It really could. So be aware, right? It absolutely could. We're also on a 5 minute, we're getting a long VIX. That's a little bit weird. At this hour. Notice the VIX all of a sudden is starting to move. So maybe we do pull back here. We'll see. We'll let it go. But on a daily, we're at 60. So it could go much higher. The mean is 21,363, and so we'll see. We get up into euphoria on Monday or Tuesday, then I would be fading it for sure. But and then the VIX on a daily. Let's put the VIX on a daily, and let's see what we see. And we get the VIX at 30. So the market is on a daily basis, at least the Nasdaq is very much in proportion. This is normal. This is just trading. This is machines. They're acting the way they're supposed to act. I'm totally okay with this. Um, it makes sense. If the VIX gets into a panic sell and the markets get up into euphoria, then that could be the bearish capitulation, and then that'll be our trigger to begin fading. But that isn't going to happen. That is not going to happen today. That could happen, early next week, maybe, or in the days ahead. For position trades, right? What we're doing here is intraday trading, and so we get a lot more practice. And we'll put this back to a 1 minute. And again, for those that are coming by, I set this last night as a short, and the machine, the market went long. And if you took it and you still have it, and we have members that did, you're up 7 grand with one mini. If you did it with a micro, you're up $700. Not bad. How much money would you have needed to buy a micro? $2,400. 2,400. Percentage terms, what is that? 30% return. But we don't use percentage returns. We use profit factor, over time. That is how we keep score. So I'm going to let you watch. Any questions, let me know. We're only going to be taking shorts, and we will probably be turning the strategy off, probably, soon. No, no, certainly not after 3. There's no way. So I'm looking probably the next hour or so. If this doesn't come in, I'll let you watch though, the rest of the afternoon. Okay, one of the things I'm going to do, um, I have another screen that is managing the trade. I'm going to go to that screen. I just want you to know because I'm going to be kind of in and out. And at this point, I don't want to do anything really stupid here. I probably shouldn't even be trying to play here. Um, so I'm going to knock the leverage down myself, right? So we're going to play the MNQ if you don't mind, and maybe only for two, right? I'm not, I don't want to get stupid here. I mean, MNQ 25. Is that okay? So that's what it'll be. Would you like to disable strategy? No. And oops, I got the wrong one. It's MNQH25. And would you like to disable? No. And I'm going to set the number of contracts to just two. All right. And because it's a Friday, right? And I don't want to and I'm usually here nearby, but I'm usually almost never trading, so I'm a little bit um doing something I don't normally do. And so I'm going to reduce the margin. That's all. All right. So it'll be what it'll be. Now you'll see it go in here, the trade, and you'll see it go in here. If it goes short, it may not, right? But up here, you'll see the trade go in as two micro contracts. How much margin will that be? $240 a piece, like 500 bucks, no big deal. No big deal. You know, maybe we make, 50, 60, 80 bucks, right? I don't know. Maybe, maybe if it sells off, maybe I can let it run a little longer, right? Because it's not gonna hurt me that much, right? For the week. That sound okay? Sounds good. Now, um, I think you have to have the mindset too. It's your money. It's your time. You want to be thinking, you want to be a thinking trader. You want to be thinking, maybe, you gotta have a mindset, if I was running a hedge fund and I've got, I mean, this is what I'm going to do. Are you going to put, I don't think so. You're not going to do that, right? I'm not going to do that, right? So, what we're teaching is trading as a business, always thinking and managing that risk, right? I don't feel this week that I had so many opportunities, right? We did, right? We were all around it. The other day when she jumped, she was up 9,000. We weren't on that one either, right? Um, and again, this week, I'm not saying I would have caught him either, but we have some things going on. So I was kind of you know, my trading was distracted a little bit. It just is. It's going to happen, right? And if your trading is distracted, it's distracted, and you're not going to trade as much. That's all. And you come at it another week. It's normal. It's normal. All right. So, um, but I made that decision to play it on the short side because I thought last night. I'm thinking, you know what I think? I think they're going to give it a little bit of a goose overnight, and it's probably going to be a trap, and then they might sell it down in the morning. And so I set it up to only play on the short side. They didn't do that. They jammed it in the morning, and then they carried it all day, the bastards. So I didn't set it up to play both sides of the ball. I set it up just to play one direction. Market went the other way. I didn't go. We did get this little short. We got a couple of them in here, so that's what we made last night in the wee hours, but that's all we made. It added, and for the week, 1805, profit factor about 1.8. That's eh, for the week. That's not, that's a but it is what it is. By the way, if you didn't take it at 335, where else could you have taken? So here it is. That's the trade. That's up 7 grand. This one right here. If you didn't take that one, you could have taken it this dip long. You could have taken 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 that dip long. You could have taken that dip long. You could have. I'm not, I don't, that's not my thing. So I didn't do it. But you could do that. You could program the machine to do it. We don't talk about taking the dip, but you could. And you can program the machine to do it. And then you can also um, see how successful that would have been. I'm almost afraid to look at, let me go look at something. I'll share this with you in a minute. Hold on. Okay, this is what I want to show you. Um, I probably shouldn't beat myself up too bad, right? I didn't take every single trade. I didn't this week. Let's put it over here. I'm going to go here to strategy performance report. And I want to show you, let me show you the machine. If you took every single trade today, you would have made 6,000. You'd be up 6 grand. If you took every single trade yesterday, you would have been down 830. But look at some of these other. This was a day that if you took every single one and you let it run through all conclusion, there's a negative outlier, right? That's we don't, if you're gonna go for those, you could run into one of those, right? If you were running it balls to the wall wide open, right? And that's not, but that would be a negative outlier a day, and I don't like that. I like those, but I don't like those. This is the over 5 weeks. This is a performance report. Look at kind of narrow now. It's narrowing a little bit. It had been higher. But what I want to show you is what about for the week? Here's the periodical. For the whole week, if you took every single trade, which I wouldn't suggest anybody do, um, every single one, 24 hours a day, not a good idea. The machine would have made 1,500. We're up, what, 1,800, right? And I only took a few, right? So I wasn't in it very much. But you could do that. That would have been a very bad week. But here is another week. That week would have been a very good week. Oh, I want those done. Well, but you don't want those, right? So that's where, you have to be adept and we can set it up. So you may not get all 29,000. Maybe you get 15,000, but we're not going to get all 17,000. Maybe you lose, 3 or 4,000, right? Maybe you don't, but so we do kind of teach that and I show that because if someone is of the persuasion that, oh, I don't have to learn how to trade, oh, I don't have to learn anything. I just have my bank of money and I'm just going to program it and I'm just going to punch it in there and it's just going to automatically print me money. Not quite. Not exactly. You're still going to have to make some decisions and you're not going to get them all perfect. And I'm also reminded, I think it was Apollo, one of the Apollo missions, and it's kind of interesting. They said that when they were going to the moon, they were off course 97% of the time. And it would be off course, correct, off course, correct, correct, off course, correct, off course. They hadn't been there before. They weren't exactly street signs. They weren't road signs. There wasn't they had to keep correcting the now we don't have to, correct, self-correct 97% of the time, but you've got to be prepared to be, sitting on your hands. We've been sitting on our hands all day, all day. So I want you to be able to for those that want to hang out and see if the 5 minute short comes in and I got a little something on it so you can see the trade go in, I'm prepared to do it. It's not going to hurt me. I may make a little bit, maybe not, but you'll see it. So in here again on this screen, you're going to see the NQ. Here you're going to see the NQ. Up here, the screen that's actually running the strategy, it's going to put in MNQ, which is a micro, and it's going to be two of them, 2 micros. So it'll be much less if it goes. Okay, and I do have to bring, but I also want everyone to know I'm in the office every Saturday morning. I really look forward to it. I get up real early. I'm in the office up until about noon. So if you want to call, you want to look at the website and you want to call me and you want to have a little one-on-one chat about what you've been doing, what you want to do, what you want to achieve, you're welcome to. You can call any day, but I am in the office on Saturday mornings. Saturday afternoons, no. Sunday, no. Other than late Sunday afternoon, then we're going at it again. I can't wait. Um, That'll be a challenge to do. Hopefully much better. And we have dozens and dozens of other tools, and we're always working on them. Right. So when you see me here at night, we're working on other tools. We got other requests. We got other folks doing other things that want help doing other things. And we're constantly working on that for them, for us, and maybe for you. Maybe. Have fun. Okay, so I'm still letting the machine do this, right? But I do want to point out to you, um, remember when we got up in here, right? We get up here. Let me just do this, right? It's just that you don't want to be having to do this manually every day, right? It gets to be, having done it, right? It can be a grind, I mean, that's what you want to do, but man, I don't want to do it manually. Let me get a marker here. So remember we were looking at this was the established high, and then see we had all this momentum up here, very, very strong, right? And then, this one here doesn't really help us much because it didn't get there. But this one tells us, because this one went right up to the same high. But notice the momentum down. And what you really want to see, ideally, is you actually want to see it get up above, get up above that with low momentum. And then what you do, but even here, now you could, I'm not suggesting anybody do this, right? I'm not, but you could have done it. Now, this is a 5 minute, right? But here is the 1 minute right here. Now, we don't have the 1 minute chart up, so, just keep it simple. So it was 28 minutes ago, 28 minutes ago, and it shorted right here at 21,632. So that would have been right in here. So this 1 minute could have been a decent little counter trade to take. Could have been, you know. Um, and so that would be a 1 minute. Now we could have a 1 minute chart up, but I just don't want to over confuse it. And what you could do, and now what you could do here is you could set a break even stop at $50 or $100, and then just let the bitch run. Or, so you can be using, multiple time frames and using a shorter time frame. And we do teach this those first few days of Q school. We got folks trading the 1 minute in conjunction, really the 135 in conjunction with each other. And we spend a few days doing it and get folks, hey, Teddy, what's going on, buddy? You okay? Yeah, we're not going anyways, but we're not now. So, but this is the 5 minute. If you did it on the 5 minute, you certainly don't want to go above that. So you got to be prepared. That might be a big risk, but we'll see what happens. Right now it's dipping. These are yellow and it's yellow here. So it is dipping. But we're at least 5 minutes away from getting a short signal. If we get a short signal, these candles will turn red and we'll start headed down. The momentum is really starting to get negative on a short-term basis. A longer-term basis, or the distant momentum is still pretty strong. So the likelihood is going to be a little pullback. I'm not expecting anything outrageous, but you never know. And maybe we pick something off, right? So I could have done a couple of things. What I chose to do was to go to the strategy that's running it and put the two micros on, so I don't, you know, get a quadruple bogey here on the last. That's going to be the last trade or so of the week. So I don't want to do that. Um, Preferably not even trading now, but I wanted to show you. But if I hadn't done that, I could have maybe used 5 micros, or even a mini and gone with a 1 minute. And if we made our $300, okay, we make our $300 and be gone. So you could have done that too, right? Different options, a lot of different ways to do this. And but I can't be sending alerts. You can be setting up alerts to be sent to you, but you have to have this on your desktop, if you're going to do it. Yeah, I mean, you can't be, and you're on delay, right, on YouTube. So if you're trying to pick it off on YouTube, you're on delay. Our annual members also have a Zoom feature, or they can come into our Zoom, but they have it on their desktop. So the only reason they might be patching into Zoom is, they're bored, or, they want to reach me for something. Otherwise, presumably, they're doing okay and they got their stuff on their desktop. Does that make sense? I hope so. And Ken, I see you. Ken, I will be sending you tomorrow morning those files that I talked about. Ken is an annual member, so Um, so let me erase those things. I didn't forget you. Erase that. We're going to see how this plays out. Now, the probability is that it still runs back up. That's the probability. I mean, you don't want to always be countering, but we'll see. We'll see. We got a hint that we might get it. So I gotta sit on my hands and just, I'm gonna let the machine grind on it. I'm not gonna grind on it. Let's go take while we're here, we got the 1 minute. Let's pick on this one. I tell you what, let's do this. Let's go here. Oh shoot, I can't see it. Mm, here it is here, I think. Intraday. I think it's right here. Yep. So here's the intraday. The ES goes long at 3:05 a.m. The NQ goes long at 3:35. The Dow goes long at 2:50 a.m. This is weird, huh? The Russell went short today at 12:55. Gold is short at no, that may not be the right contract. I think it is February. I think it still is trading February. Not sure about oil. Thought they changed that. I like to just put in the continuous here so that we don't have to keep updating these contracts here at CL. No, it's actually in a long in gold. Let's do the same thing for gold at GC. So yeah, there it is. It's the February contract. That's still the same. And of course Bitcoin. Look at Bitcoin, crazy bastards. Um, this was at 6:40 p.m. yesterday, and you would have picked up 5% on Bitcoin, 5 grand on the coin, 5,000 dollar move on the coin with a futures contract would have put $26,000 in your account. But that takes, quite a bit of margin to play. Very, very big. I don't even know what it is, but I mean, it's probably 70, $80,000. It's quite high, maybe 100,000, may not even be. It's very high. Um, but you have micros. You do have micros. So what I want to look at though, let's put the ES. Um, let's do it this way. Let's look at the VIX on a daily. If the trade goes in, so the VIX is at 30. Let's look at the ES, the one it's really matched to on a daily. We're at 70. Market's really performing beautifully. It's perfectly balanced. The hedge funds love this shit, right? It's perfectly balanced. Their machines perform beautifully. Our machines perform beautifully. Um, on an intraday basis, right? On an intraday, the markets are nice and normal. Um, Here's an example though. The daily swing did go short 12 days ago. It is ripping against it. It's still on a short trend, but it did rip against it, and it is having a dry down. Little unusual to have that big, but it can happen. It can happen. Um, we'll come back to this in a minute. Let's go to the daily. That might be the same. Okay, so the NQ is actually trying to get long now, right? So it may have also got caught in a short, could have been a losing trade. Let's put the Dow on a daily. The Dow went short 20 days ago, and it's ripping against it, and it's putting it's underwater. So the shorts that got caught here even swing on a daily. But watch what I'm going to do, and then same thing. Now, when you have this tool on your desktop, the swing traders out there and the hedgies maybe, or the retail crowd or the Tom Sosnoff. Well, Tom doesn't look at charts at all, but they may be looking at, daily stuff, but we can change this to an hourly. So let's change this to an hour. Now you can trade options on an hourly futures contract off of it, off the signal, because the hours can last for days. They can last for a couple of weeks. And what we're in essence doing is we're getting inside the daily trader. You're getting inside their head. You're getting inside all their chart bullshit. So watch. Let's see what happens here. And I don't know what it's going to look like, but let's see. There it is. So on an hourly basis, on a daily basis, yeah, it's how would I describe it? You know, you're trying to eat steak with a spoon, right? So it becomes difficult to eat steak with a spoon. Takes you a long time to chew your food. Takes you a long time to do it. So you better use options for, 35 or 45 days. Right? You eventually cut the steak and you eventually get it down. But if you really want to eat the steak, you need a fork and a really sharp knife and the good teeth. I haven't used this analogy an hour. So 67 hours ago, you would have got a long signal at 58.86. Now, maybe you're not trading futures, but maybe you're just going with it because the smart money is trading futures and the really, really big money. They are. And then you went in. What if you had bought a call option right here at 58.86? How much do you think you would have made? Hmm? What about the NQ? Now watch this. This is going to be, I think, wow. No, 16 hours. 16 hours ago, 6,500 bucks. Now that would have been at midnight last night. Now you can't get a call option on. You're blocked out. So if you're just an option trader, what are you going to do? You got to wait until 9:30, 9:45 and trade with the tasty folks. Good luck with that. You want to listen to that shit all day, every day? Come on. I don't want to listen to him. God, you don't want to listen to me. I don't want to listen to that guy. God. By the way, being rich doesn't mean you're smart. When it comes to politics, I couldn't disagree with that dude more. But in any case, this isn't about politics. 60 minute, 92 hours ago, 6 grand. Now you could have got, options on that maybe the next day on the Dow. And then how about the Russell? 60 minute, 88. It's pretty wow. Why don't we put them all on the 60 minute? Let's go down and customize and put them all symbols. 60 minute. Now, nobody else has radar screen. Nobody else except us and our annual members have Swing Machine Plus. Check out the Bitcoin. On a 60 minute, it went long at 94,820. That is a 12% signal over noise in Europe. You're not now, if you own one coin, oh yay, good for you. You made, 11,000. But, they might take it away from you over the weekend. They might take it away from you next week. You never know. If you traded, instead of using all that capital and tying it up, you traded a futures contract at 80 for 89 hours and you made 56 grand, and then you can be in cash. What do you want to do? What do you want to do? You want to be a hodler or you want to be a trader? You got to make up your mind. You know, the hodlers are going to get smoked. And guess what? The smart hodlers, and they're going to jump out. They're going to jump out on you. And then you'll have gonna have, Davey Portnoy, he's probably buying it up. We're going to 110. Yay. We're going to all this weekend. We're going to 120. Oh no, we're going to 150. Oh, we're going to 200. Maybe we are, right? Okay, well, stay long the futures contract. If you used a bunch of micros, a bunch of them, and the same thing, take half off, let the other half run. If you know how to trade. Beautiful, beautiful trade, beautiful signals, right? Beautiful. But if you're making the decisions on the money, you're not going to get those. you're only going to get, 500 bucks. You're only going to get 1,000 bucks. And you're going to have a hard time learning the tools and learning and developing the confidence. If you're constantly, if you take the plane, you learn how to fly, you take the plane up and you fly around the airport and you're like, okay, whew, we're still alive. Let's take it down. Boom. All right. Let's go tomorrow. Let's take it up. Let's fly it around. Okay. Let's take it down. Ooh. I mean, would you do that? Why would you do that? I mean, isn't the purpose of flying to get from one point place to another? I mean, don't you want to take the plane up and, fly it to, from Tampa to, well, I don't know, Amelia Island, and spend the weekend and turn around, fly home and have a good time? Trading is supposed to help you get from point A to point B. It isn't just affecting one measly trade. Trying to open your horizon. I'm trying to open your aperture. I'm trying to get you to think about what you've been doing, right? I neglected to ask the gentleman yesterday, nothing wrong. He had a healthy kitty. He had a very healthy kitty. He had he told me his kitty was, between 20 and 25,000. That is a healthy trading kitty to get started with futures if you want to trade micros. But, his expectation was that I want to be, after I go through Q school, I want to be making 40 to $50,000 a month. Well, that's not going to happen. Not going to happen. So it's just not going to happen. And I wasn't about to tell him it was going to happen. Um, but I neglected to ask him. He said he'd been trading options for 14 months. Well, is he doing it with that? Not going to be any easier. I don't know. I don't know. I don't even want to know. I mean, 40 to $50,000 a year, or 40 to $50,000 a month is $500,000 a year. That's a lot of money. I don't know. Maybe, I hope not. Maybe he started trading options 14 months ago with 500,000 and maybe he's only got 25,000 left and now he wants to get that money back. That ain't gonna happen. Now he's now, and that's a hell of a awful position to be in if it is. I don't know what his position is. I don't want to know. I don't even want to know what your position is. I don't need to know. I can only describe the process and how we go about it. And then you, in the privacy of your own home, with your spouse, your significant other, have to think through how you might want to proceed and not be changing from day to day to day. I will help you, and I am going to help Sil, who's going to be with me for 3 weeks, who's here. I think he's here, but go through it and develop a weekly plan and learning to control the things that he can control. And we're going to do that, and we're going to have a great time. He's going to have a great time. Beautiful stuff. Let's go back to here. And nope, she's not, the 5 minute doesn't want to let go. So we'll see. I think sometimes, I don't know, you guys haven't been very patient, watching. I think sometimes, people come by and, I had one gentleman, I haven't seen him since, and he punched through one of our windows, and I think it was the day that I was down like $1,500. And he's like, why are you down? Why, why are you losing money? Oh, I'm not going to watch you. Oh, you're losing. Oh, I'm moving on. The young kids, and I was just chatting about this with Susan because there's a lot of news about, we just had lunch about TikTok. They're going to buy TikTok. They get the attention span of a gnat, about the thing, I mean, and I see some of the TikTok stuff, that comes across the feed on the Twitter, but, they sit there, boom, 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 boom. It's like these, what is it, like 30-second clips, if that, or 10-second clips, cat videos, this, I'm here. Chat was not, oh, okay, no problem. So And so I don't know, and the young people love it, man. They love that TikTok, and it's kind of like, they get a very, very short attention span. They're very, they just got to be constantly, on the go, or they just got a very short attention span. And I think there's going to be a price to be paid for that. But if you're going to do this, you're going to need to be attentive. I don't want you to have to be tethered. No, no, I can get up, have lunch with Susie. I go to the mailbox. I can take Ted for a walk. I can get on the treadmill. I could even, run to Lowe's. Now, folks in my community think I'm retired. I'm not, right? I work more hours than they ever dreamed of working. They have no clue. Now, I make more decisions probably in a day, more financial decisions in a day than they probably made in their lifetime. They have no clue, and that's just fine. Um, but I'm not, I don't have my hand on the mouse. I mean, it's a great life, great life. Okay, so there's the 5 minute dipping again, right? So we'll see if we can. Now those counter trades, those 1 minute counter trades, you got to be really, you can't be, those counter trading, you get many more counter trades than you get trend trades, right? And we draw that analogy. You guys may have heard it ad nauseum. I used to do it with the hurricanes. I don't know. We had the hurricanes. I don't know if I should use it anymore, but um, every hurricane that hits Florida, every hurricane started in the Sahara Desert from a little butterfly that bent over, farted, and kicked up a little dust. You know the story, right? That dust got in a little boll weevil and became a cloud and became a storm, then became a hurricane, and then gets off the coast of is it the Cape Verde, is it the Cape Verde Islands, I think, and then gets into the Southern Atlantic, the warm waters, and then comes over and a week or two later and wreaks havoc with us. Every single hurricane that hits Florida started with that little butterfly fart. Hard to believe, right? That's usually the pattern. Every hurricane that does that. Not every hurricane hits Florida, though, right? But every hurricane starts that way. Now, every butterfly fart does not become a hurricane. Sometimes it's just a thunderstorm. Sometimes it's just a cloud. Sometimes it's just a butterfly fart. It's just nothing, right? Trends on any interval are hurricanes, are hurricanes. And that's what we want. Counter trends, counter trends are butterfly farts. They happen all the time. And we will be making so aware of those and everyone else that goes through the Q school and to be able to discern. Now, it's okay to trade those, but you have to know what they are, right? So there's another one. There's another little 1 minute. Right now, it's still just a little butterfly fart, a little counter trade. You see it on the 1 minute? It's underwater a little bit. And we can look at the model and it'll tell us it may run up to $300. It's a little stubborn, a little hard to do because it's a counter trade to the five. So we'll kind of watch it. We're not going to trade it, but we'll watch it. The likelihood is that it'll run up a little bit and then just dissipate. And then the trend will kick up and the 1 minute will go long again. And that's fine. That's what, we'll want, still doing in the beginning. We're going to teach you how to get on the back of the trend. We want to get on the trend first. Later, we'll teach Sil and everyone that goes through the queue how to do some counter trending. The counter trends are very seductive because why? Well, they're very frequent. Counter trends, they're very frequent. There's a lot of them. Trends are infrequent. Not They don't happen that often. Even on a 5 minute. I mean, we've been here all day and it's been long all day. That's a trend, you know. They can last even a 5 minute trend. And you want to get on, we want to teach and we want to be able to get on those. You may not get every single one. The other characteristic of a counter trend is they don't pay a lot. They pay a little. They only pay a little. In relative terms, this is in relative terms, a trend, a trend can pay a lot. You know? $6,000 can cover up a lot of sins, right? Can cover up a lot. Now, the other thing about a counter trend is when you're counter trending, you need to have a win rate of 70 to 80% to make it worthwhile. You got to be winning a lot, 70 to 80%, and you're going to be active 70 to 80% to be a really good counter trender. And you are going to be active. A trender, nope, you're not going to be that successful. In fact, out of every 10 shots you take on the trend, you're going to lose 5 to 7 times out of the 10. Psychologically, you might not be ready for that, but that's the reality of it. And we're going to need to show so. He's going to need to, practice and to see that for himself. So we want your expectations to understand that so that you're not like, wait a minute, so we gotta know if we can help you with the expectation part of it, you'll begin to like, you see it over, okay, so that we're gonna see if this little counter trend is successful or not. If it isn't, it's gonna go long. And if it goes long in the direction of the trend, watch how fast the money builds. It'll build probably really fast, a lot faster. See, this is bucking it. It's trying to go against it. It's a little more difficult. And um, so those are some of the differences. The other key difference is when you are a counter trender. Um, Very good. So keep writing your questions down, right? Keep writing them down. I'm eager to get going too for you, but we gotta wait, right? So still got the videos in advance. He wanted to digest it. All right, so the counter trend failed. Now my guess is I'm not gonna take it, but my guess is this one's gonna run up really pretty fast because it's still on the back of the trend. A little late and long in the tooth, but let's see if it does. The likelihood is it will. Let's see. But the when you are counter trending, which we will teach, but not initially, because most people are counter trenders and they don't know it. Um, and we're trying to get them not to do it. Um, you have to have flawless execution. It needs to be flawless because you don't, if you get sloppy, you'll get carried away by the trend. It'll carry you out to sea, and then you get hurt, and you get hurt pretty bad. So you got to know what you're doing. Tom Sosnoff is a counter trender. He's definitely a counter trender. That's why he said even last night, I'm not playing for the positive outlier. I'm not playing for the negative outlier. He's not playing for either. He doesn't want either one. He doesn't want the negative. He doesn't want the positive. He's just playing for, the middle and but he's counter trading and he's with options. Most option traders are counter traders. Most retail traders who trade options are trying to get on the trend. So it's a little. He's a seller of options, and most retail traders are a buyer of option. When we talk about options, when you're a seller of options, the time decay is on your side. When you're a buyer of options, the time decay is working against you. All right. So in 4 minutes, we're up 55. Now watch how fast this thing will probably run versus the counter trend, right? I wouldn't be surprised if we get up 200, $300 really, really fast. We'll see. There's 100, pretty quick, 4 minutes. And with a trender, um, there's less trades, so you don't have to be as precise, right? So if somebody got on this and they made 1,000, Tina, Susan made 1,500, maybe I made 3,000, maybe Sil made 5,000. Okay, who cares, right? I mean, so none of those folks made the 6,800, but they're happy with what they made. They got a good portion of the trend. Congratulations. Let's go get some more later, in another few days or another day. Great. It's not as not as rigid, right? We'll see how this works out. I hope no one's there on YouTube trying to, trade these as I'm pointing them out, right? You're on delay. Even if you make a little bit of mad money, you got to really stop and think about why you're doing it, right? Maybe it's best just to kind of watch it, see see if it makes sense to you. And I know what you're probably doing. You probably have, your candles up. You probably got some moving averages up. You probably got some stochastics up. Probably got some MACDs up. You're probably spending all your time. Oh, it's doing this, it's doing that. Oh, I see what he did. And, that's fine. Some of that is, you put enough shit on your screen, it will sometimes line up, but it's not going to do this. And all of Swing Machine is original code. There's about 800 lines of original code, and but there'll be instances where the two moving average cross the eight and or the 10 or something, and somebody goes, "Oh, that's that." No, it isn't. But I mean, have fun. If somebody's doing that, but um, and we can trade, from here. There's a technique that we're going to teach Sil in the beginning, the very first few days, how to trade and get on the trend on any market. And he's going to be doing it. He'll have it on his machine. And then after he starts doing that and he develops a comfort level and starts getting a performance, then, we might ask him to, if he wants to come in and do some counter trading, and then we're going to keep peeling it back. And he's going to be doing that. He's going to be doing it all mechanically. And then at some point during the 3 weeks, probably like the second week, what we're going to start to do is bring the robots into play. And then he's going to be not competing with me. He's going to be competing with the robot. Now, the beautiful thing, so, right? He's going to be like, I'm going to ask him to trade the 1 minute and the 5 minute, and he's going to be trying to do it like a few days, and then we're going to send him the program, and then the program is going to start doing it, and then he's going to be competing with it. He's going to get to see who's the better trader, and I hope he is. Actually, I hope he beats the machine, right? Beat the pro, not me, but beat the machine. And you can beat the machine sometimes, if he understands, like, I understand what it's doing, Don. I get it. And, it's just there to help him. That's nothing wrong with that. And that's what we'll be doing. And it won't be just this, right? Though, like, it's now, um fortunately or unfortunately, when we do the Q school, we're moving every day. We get an agenda. Every few days we're gonna be, just as he gets comfortable with something, we're gonna change it, and we're gonna do something else. And then just as he gets comfortable, we're gonna do something else. And what we're doing is we're laying out the buffet table. And I'm going to share with him the buffet table before we get started so he knows what's coming. I will. So, don't worry about it. You'll know what's coming. The idea is that if you go to a buffet, right, you kind of, I don't know about you, but I kind of like want to either look at the menu or I maybe want to walk the buffet line, and I kind of want to see what's on the buffet, the smorgasbord, so that I don't, you know, put together a bologna sandwich when, there's some steak tips down the other end. So what we're trying to do is lay out the choices, the trading choices during these few weeks. really difficult to get, maybe totally in the groove. He'll get exposed and get a groove and understand what he can do and things, but won't be, for anyone, where exactly they might want to be, but they'll know. They will know. You will know. And but we want to lay that out because at the end of the few weeks, then he can reflect back and then pick one or two approaches that he most likes. And then he'll start trading. But he'll always know in the back of his mind, and we have a library of these tools, video little libraries, that if he runs into some issues, he can always reach out. But if he runs into some issues, there's always, I remember we were doing something. I remember that three-line break. Maybe, this is a market for the three-line break. And he might start trading the three-line break. Or maybe this is a market for the range bar. It could be anything. And maybe this is going to be a market for the C point strategy. Maybe this is going to be a market for the GPS near. Because all of these individual tools can trade in and of themselves and can trade in conjunction with other things. And you might be trading after 6 months with us and you're trading something and you're noticing something and maybe Tina's looking, Don, I keep seeing things are off these ball markers here. Every time it breaks through, it runs. Every time it does this, can you write a program that we can trade off of these ball markers for me? Yeah, we can. Yep. Yep. Now, it could make for a long day if you're sitting here like waiting, 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 for it to get close to the ball marker. And maybe it crosses, maybe it doesn't. We have what we call that proximity fuse, where you can get notification of when the price action gets really close to one of those ball markers. Don't cross it, but just gets close. So you can say, oh, wait a minute. Honey, I got to finish this bologna sandwich because I'm joking, but I don't eat bologna. But, I loved it as a kid. Yeah, I did. Um, and, um, and I need to attend to business, you know, so you can be doing other things, washing the baseboards, you know, painting. I hate painting. I absolutely hate painting. I got some painting to do this spring. We get any painters? All right, so we're still now on this 1 minute. It's been long for 11 minutes. It's long again. It's giving another re-entry, but we're not going to get that active here. It's been hovering up here. Ample opportunity to make $100. Now I can tell you that the 1 minute NQ, the average payout is well, I don't have a screen up to tell you. I could tell you exactly, and I shouldn't guess at it. I'm not going to because I'm going to have that conversation with Sil. So um, I'm going to wait. I'm going to wait. But we can know, right? We can know. We can say over the last 5 weeks that the average payout is X. The average run up is X. The average rundown is X, right? You got to remember, if you, I know everyone wants a profit, everyone wants a run up, but you also got to be prepared for the rundown. How much of a rundown do I have to be prepared, right? So let me ask you this. Do you know, are you trading something? So let's say the average run up is, I don't know, let's say it's $600. Okay. Let's say it's 600 bucks. What if the average rundown is 1200? What are you going to do? That's going to be a big problem, right? If the average run up is 600 and the average rundown is 1200, I mean, you're going to get killed. Your nerves are going to be shot and you're going to lose a lot of money and you're going to be sick to your stomach. And if you're not drinking, you probably will start drinking. I hope not. On the other side of the coin, if the average run up is 600 and the average drawdown is 200, what's that? That's a risk factor of 3 to 1. That's good. You're going to have a lot of fun. You're going to make money. You're going to make money more often than not. But if you don't know what your risk factor is, then you don't know what you're doing. And God knows what you're going to do. I have no idea. Maybe you make money, but you just got lucky. And you can get lucky even flipping coins. You can get a flurry. You can go to the roulette table and bet on red and black and get a flurry and hoot and holler and, have a cocktail and have a good time. But you stay there doing that. Um, you're going to make a donation, right? We're not gambling. We're not. Mm-mm. Nope. Those are games of chance too, by the way. The rules are defined by the casino. The odds, the probabilities, the betting ratios are all defined by them. And that it favors them just by the slightest of margins, just that little bit of 2% or so. 2 to 3% is just enough to take your money away over time. Here, you define the rules, going back to what Tom Sosnoff was talking about. And I'm not blowing smoke up him. I just, we've been talking about it for years, but learning to control what you can control. So you define all that, and you got to know what that is. And it's got to come second nature. And you got to do it with everything, whether you're trading futures or options or whatever. What a sleepy day, huh? Man alive, for a Friday. A little bit odd that the VIX is long here. But it's, it's still up, still elevated. She's struggling up here. I'm not going to force it though. I'm going to still stay, with the 5 minutes, see if we could get a little trade off. But I'm not going to do it. I mean, I'm not physically going to do it. I don't, nope. I'll wait. I hope it makes sense. I'll be in and out and from screen to screen here. We're kind of winding things down. The inauguration of Trump is on Monday, and I think half the world is feeling good about it, and half the world is feeling sick about it. Um, just the perspective. I think from here in the States, and I think everyone in the world should actually feel very, very good about it. If you've been watching some of the hearings at all, you may not have. He's assembling, I think, almost a dream team of people, and they're very, very good. And what I said to Susan, what's really, really good is they're young people. They're 40 years old, early 50s, with the exception of RFK, but really young people, very, very smart, very, very good, very experienced. They're not the pencil neck geeks from Harvard and Princeton either. You know, um, for all of his human frailties and maybe mistakes, the gentleman is going to be Secretary of Defense. Did have dust on his boots. And I think he's going to do just fine. And I think all the others from, um, the attorney general, what is her Pam Bondi, from Florida, which we know. I think it's going to do a very good job. And I think, the FBI director and all these people, I think are going to do really good. And I think it's going to be I think it's going to be volatile in the markets. I absolutely do. Um, and it's going to be, I think it's going to be really good. And he's going to be here one term. He's actually only going to be here, really effective for 2 years. I think he's come to the realization and that now we got another, what do we got? We got another counter trend here on the 1 minute. And, we'll see how much that running up a little fast. Now the 5 minute is still dipping. This is the 5 minute. And, we'll see if it can get ourselves a little bit of a sell off. Now, I don't know if you know this or not, but if you're ever thinking about on a big, big day, thinking about going against the grain right before 3 o'clock, you probably don't want to do that because if anybody was caught short in the hole earlier in the week, and they were hurt. They were hurting. They may have been getting margin called. They may have had to cover some of their bets. And then they may have been hoping, well, maybe today it'll go down. And then they get another fall through, another huge spike, another big short squeeze. And what happens is the banks will start reaching out to them, and they got until 3 o'clock to do one of two things: to either put more money in their account or to cover their shorts. So what the Sharpies will do, knowing that, they'll wait, and they'll wait for the forced buying to occur, because the banks will just come in and close their accounts. If they're short and they don't have the money in there, they'll just buy them and they'll buy them out. So when we get something like this, if we're going to get a sell-off here, if we are going to get it, it's going to happen within about 10 to 12 minutes right after 3 o'clock. If we are going to get it. If we don't get it by 3:12, it's usually 3:12, 3:13, not even 3:15. It happens pretty fast if we're going to get it. If we're not going to get it, then I'm going to turn the strategy off. I'll let you watch, but I'm not going to participate in the last 30 minutes or so. I'm just not. But we'll see, but these people here, this here was a massive, once again, another short squeeze. So anybody who was short and bleeding, and then they opened up their account in the morning, like, oh, you son of a bitch, they're getting killed, and then they have to cover their bet. And if they don't cover their bet, they don't put more money in the account. The brokerages will close them out. And that's maybe what was going on here. And then it gets to be 3 o'clock. The person was short closes their computer or the hedge fund. They say, son of a bitch, they close it. The markets are rigged. I'm never looking at my screen again. And away they go. And they will look at their screen. And then suddenly, boom, it falls down. And next week it sells off. And they're like, man, I was close. And the reality is they really weren't close. They're never really that close. They think they are, but they never were really were that close. Mm-mm. That's the human emotion of what these folks go through. We don't go through that. Mm-mm. Nope. And so isn't going to be going through that either. Nope. We're going to break that spiral. Okay, so here's this little counter trend. 7 minutes, $300. Okay, if you are a counter trender, take it. Take it. You would take it. You don't stick around as a counter trender. All right, I'm up 300 and I think it's going to do. No, you take it. You've got to be disciplined on as a counter trender. And trust me, I love to counter trend, but I don't do it a lot. But I do love it. And most really, really good traders do love to do it. Um, because the money can come pretty fast, right? And there's a lot of it. You got to take it. You don't, that's how you get in trouble. Getting into something, it runs up a little bit, and the next thing you're holding, something you did on an intraday basis, and you're holding it like 2 weeks later, and you're down a whole bunch of money. That's crazy. So, that's not what we do. When you look back, and I think I feel for the professional golfers, and we don't look back on the trading, but we're human, right? You look back and I imagine even for the golfer, there was a young golfer, he had the lead. I don't know if you heard about it, and he blew it in the back half. And, I'm sure, but it's all part of the process. I'm sure he's going to look back and recount like, wow, why didn't I do this? Why didn't I do that? And, this past week, I mean, you saw it. I was here live with many of you, and I forget what day it was, Wednesday or something. Remember, the trade that went off in the wee hours of the morning. I think it was like around 3:30 or so, 3:30 a.m. And that trade ran long until about 2 or 3 o'clock on the Nasdaq, and that was up 9 grand, 9 grand. And then this one here at about the same time, 3:30, 3:35. That's some big ass hedge fund. Could be the Swiss central bank, right? They playing. You know, there's like I say, there's some dude sitting in his $1 billion, or not $1 billion, but some yacht off of Monte Carlo. He's down in the basement with a bank of screens and his trade station account. And the trophy girlfriends are swimming off the back of the boat, and the fool is down here trading with us. And he is, but he's trading huge. He's huge. Yeah, they absolutely are. They are. Even companies have trading firms that trade their capital. Hope you know that. A lot of people say that the airlines are nothing more than a hedge fund for oil. They trade. They trade. And so let's see if we get one off. It's 3 o'clock now. So if this is gonna go, we need to see this like, 3:05, 3:10. After 3:15, you know what? Maybe it sells down and I miss it, but I'm gonna turn it off at 3:15. And I have loaded it on only with two micros. And I'm not bemoaning anything. Now, could I get in here and actively traded some things? Yeah, sure. But I'd rather not work that hard, right? So here's this this the same one. Now, if you took your 300, you took your 300. You don't come, running back in and trying to trade the money. But I mean, it could, run up 1,000, but it could. So that's, if you want to trade, and we will have still trading, still you will be trading the 1 minute in the beginning. That's what we get everybody trading because the monies are smaller, the profits are smaller, the losses are smaller, and it'll be more active, and he'll get much more practice in. And but here's the 5 minute dipping, and if that 5 minute can sell down, we're going to get the trade in. We'll see what we do. See if we can get into this sucker. If we get into it, we'll go past 3:15. I'm going to let you watch into the close so you can see it, for yourself, but um, we'll see what we do here. But I guess where I was going with that, if we had, grabbed 8 or 9 grand from that trade, we got 5 or 6 here, that's a great week, man. I mean, that would be a great, with one contract, that's just great, man. Congrats. Let's take a look at well, maybe I shouldn't. I was going to change screens, but maybe I better not. Better not. Better keep it right here so we see it because this is where, it's going to be. I think it was a short squeeze. I think somebody was bleeding out. And these hedge funds, right? They do compete, right? And they do know if somebody is bleeding and someone's in trouble, they know, right? They try to hide that from each other, but they know. Going back to the crash of '08, there's a video of this story. I don't know the gentleman's name, but it's a brutal story, and he tells the story himself. And this was a guy who was running his own hedge fund, a small hedge fund. I'm talking like, 200, 300, maybe $400 million, which is a small hedge fund, very small. And he tells the story, and so he's got to have a banker, right? He's got to have somebody who's facilitating his trades. And this is back in '08. And he tells us, and he's been doing business with this firm, Goldman Sachs, Government Sachs, the only company in New York that doesn't put a name on their building for good reason, right? So, you know who you're dealing with. Um, and they are his banker. They're kind of his counterparty. They're the ones who provide him the liquidity to do what he's doing. And he's trading options, he's trading futures, and he's doing his thing. And he tells a story as we're going into the crash period. He's really reducing voluntarily, he's really reducing his leverage. And he's in fine shape. He doesn't feel as though, if the crash comes, he's going to be threatened at all. And he's been doing it like for 20 years with them, right? He's an old sage, and he tells a story on YouTube if you can find it. I can't remember the gentleman's name, and he tells it from he's still alive, I think. Today, he used to wasn't that obviously he's telling the story, but he's telling it from like a horse barn. He owns horses and whatnot. And as the story goes, he said what happened was he one of his people in the office said he got a phone call from Government Sachs that they had increased the margin requirement on some stuff. Now, I don't know if it was futures, I don't know what it was, but they increased his margin requirement. And so the guy came in and told him, he's like, wonder why he would do that. I mean, we're fine. So okay, all right, keep me posted. So they don't even make any adjustments, right? He goes, I got plenty of cash on hand. I'm not overly leveraged. We're all fine. But, why are they telling us there? It just reduces their flexibility if they had to do something. So it's kind of a transparent event. An hour or two later, a couple hours, I think it was all on the same day. The kid comes in again and goes, they just increased, the margin requirement again on us. Like, what the hell? And and so I think he even let it go. I think it stretched over a day or two. And where this is going, ultimately, he's got to pick up a phone call, and what they're doing is they're tightening up his margin. And he wasn't over leveraged. But as they're tightening it up, he is getting a little bit tight, the liquidity. So they start to take some action. They start doing a little bit of selling. The next day, they get another phone call and they jack it up again. Now he's pissed. And he calls the guy that has been dealing with like for 20 years. Hey, what's going on? And they say, oh, you got to, this is it. These are the rules. You got to play by them. Because you understand what you're doing? You are forcing me out. Yeah, I know it, but that's what we got to do. Got to go. Busy, short phone call. Like Jesus Christ, gets off the phone. He's pissed. You know what? Why don't we survive this? We'll get another firm. We'll get another counterparty. Hour later, and they loosen up some things. An hour later, they virtually take away almost all of his margin. Now what's he got to do? Now he's going to sell. Now he's got to sell. He's got to sell almost everything into a market that he doesn't want to sell into. So he went into the condition comfortable, more than comfortable, based on his 20 years relationship and as a pro. And now because they took it all away, he's now over leveraged, and now he's got a dump. But that's only half the story. What does he find out later? Government Sachs knows what positions he's got, and they basically shorted him. They damn near put him out of business. Well, they actually did, right? But he saved his millions, but they put his firm out of business. And as they did it, they made a fortune. Fuckers. That's called fuck fuck. Excuse the French, right? We're not doing that. You're not going to be doing that. Hopefully not, right? Maybe one day you are. Maybe there's somebody out there, who's, in his late 20s and 30s and say, you know what, I want to do that. But, these people, they're a brutal crowd. It's a banking cartel. Here in the States, we hear oil, most Americans, hear oil cartel. Ooh, oil cartel, bad, right? No, it's a cartel is a cartel, right? Maybe overseas, people probably see it as such, but Americans don't. But, we have a banking cartel and we whip that dollar around like a battering ram. It's weaponized. It is. And, and it's backed, it may not be backed by gold, but it is backed by a whole bunch of aircraft carriers and everything else. It's brutal, brutal. I don't think about it much. You don't want to think about it much. It is what it is. We didn't write the rules to the game. It's here. It's been here for 200 years. If you want to get a better understanding of where this whole idea of capitalism even started from, a great book called The Ascent of Money, Ascent, The Ascent of Money by Niall Ferguson, Harvard professor from England. Not crazy about his politics either, but I like his books. And it's a really good book. I was really interested, like, where did this come from? Where did money come from? What is money? Where did it come from? And how the hell did we ever get to place here? I know, the Wall Street started with a buttonwood tree, but where the hell did it all come from? Great book. Short one too, short read. And of course, if you haven't read The Creature of Jekyll Island, you need to read that too. And if you want to save yourself 800 pages of reading, I think it's, pretty good, great read. You can go on YouTube. You can watch their poor quality, but there's a ton of videos on it. But you want to watch the 12 videos that are read by the author, and you can give the cliff notes. So sit down for a couple of days while you're trading over a cup of coffee and listen and read that, or listen to it, and then give me a call and you'll get an education about a central bank. I don't think it's going to happen, but I'd like to see Trump come in like Andrew Jackson and take it down, the Federal Reserve, just get rid of it. But it's probably not going to happen. Maybe. All right here, 311. We still got a little bit of time. We'll wait. Now we're here, and I just want everyone to know, and I appreciate the folks that are stopping by, and I just want everyone to know, we're doing this really as a courtesy and to a chance to answer questions. I very rarely, very, very rarely will I put on a trade on Friday afternoon. Very rarely let you, I less than 1% of the time, very, very rare. Um, sometimes I might trade a little bit on Friday mornings, just putting a little icing on the cake. Um, and I had to miss some time for some other personal reasons this week and other things that we're doing and doing. And we do have folks in Q school. So, um, um, but the reason I mention it is if you're trying to get something done on a day and you haven't done it with all the time you have in the morning and you haven't done it by 3 o'clock, I would probably just close up shop and wait for the next day. On any day, don't try to do it in the last hour, and I wouldn't be trying to do it in the evening hours either. We can measure that and see that, and that's a hard way to go. Um, if you've had a tough week, you also might want to just, wrap it up, by midday Friday. And you don't want to be in here on Friday in the last 45 minutes trying to make up for what you couldn't get done during the week. We're not going to hurt ourselves here with, a couple of micros, and we're just trying to give folks a view and a chance to ask some questions and, share some stories, that you may or may not be familiar with. Some may have heard these 100 times because we share them. I like the history of the markets. I like the economic aspect of it. I don't trade any of it though, right? I don't, but I do love it. I consume, all of that, all the books that I can consume on that stuff. I don't know why. I just really like it. I like reading about it. And there's some new ones out that I'm trying to think of that are on my reading list. If you have any, be sure to let me know. Another one, another video that you can watch. So I give you some ideas if you haven't, and it's called Princes of the Yen. Princes of the Yen. Yen is, the Japanese currency, yen. And I think he's German, um, and it's about an hour or two long, and it's the author himself, and it's Richard Werner, I think with a W, Werner, and he tells his story about how he introduced to the Jap to the Japanese to Japan in the early 90s the concept of monetizing the debt, quantitative easing. He introduced it to them, and like a lot of ideas, maybe if you're in corporate America or you're in a corporation, you submit an idea, and all of a sudden you're like, oh shit, why the hell did I ever give them the idea? Because they bastardized the thing, and all of a sudden it becomes something that you wish you had never said. And that can happen a lot of things in life. And that's what happened to him. And he ended up leaving. I think he was stationed in with his bank in Japan, and they relied on him, and he got the hell out of there. And he tells that story, the Princes of the Yen. It's really, really interesting. And of course, that's what our, Bernanke was the chairman, when we had the 2008, and we had that, and that was I think we've been through it, an orchestrated hit. Bernanke comes in and launches it, they knew that. They knew it was all they knew what they were going to do. All this whole thing. The question that I have that nobody asks, nobody goes and asks Bernanke, but why did Ben Bernanke only serve one term? He launched it. He launched the QE, right? And he said on 60 Minutes, it was kind of bittersweet. There was a moral hazard to what he was doing, but he did it, felt as though he had to, and he did it. Now, I tend to think, maybe I'm wrong, but I think he knew morally it was only meant to be a short-term thing. And I don't think he could shut it off. And I think he just said to his wife, I don't know, but I think he said to his wife, this would have been like in 2011 or 2012, whenever he got out, said, screw this, honey, we're going to go to Tennessee, someplace in Tennessee. We're going to go fly fishing. And I don't want to be anywhere near this. I don't want to be the one blamed for it. So he started it, and they couldn't stop it. It was like a chain reaction. They just can't stop it. And there will be, there will be a stopping, you know. My dad had an old saying, if somebody jumps off a 50-story or, 80-story building, God forbid, right? It's not the height that kills you, it's the sudden stop. That's what kills them, right? When there's a sudden stop to this QE business, um, if you're here, if you have these tools, you're gonna see it. You're gonna be calling me, I'm gonna be calling you, and we're gonna be saying, holy shit. Holy crap. Did you see that? If you've never seen forced selling, oh, forced selling is when the banks come in and say, "Hey, bud, you know all those contracts you bought and you went long and you're leveraged and it's a hedge fund, you got to put more money in. I don't have any more money." Okay, thanks. Sell them. And the bank just comes in and boom, knocks them off. And those numbers will be moving so fast you won't even, like I say, you won't even be able to read them. And then your moving averages and everything else will be going so fast that they'll be worthless. And the truth of the matter is, it may move so fast that it may overtake swing machine. It might. And if it does, what are you going to do? You shut off. You do what their machines are going to do. They will shut them off. They will shut them off. And what happens to liquidity? Sucks right up. And then the person says, "Get me out. Get me out." The guy's like, "Well, there are no buyers. I don't give a crap. Get me out." All right. And they all get out. They are out, but they ain't gonna get out where the price was. They won't even be able to reach these people. There are no people anymore answering phones, brokers. They're all in these passive ETFs that you may not even get through. Now, TradeStation's been superb about staying up, staying stable, the platform and getting there. But, you know, other stuff, I don't know. I don't know if you even be able to, we got others. I don't even know if you'd be able to get through them to execute a trade if you had to, you know. So I just an FYI, if you've never seen it, I've seen it a number of times. Seen it in the 90s. I've seen it. It does happen, and it can happen on an individual stock. It can happen on an individual market. And when there's no buyers, that's it. Down it goes. And if it gets unstable, they just shut off their machines. And we could do the same thing. You could do the same thing. And then you just wait for it to stable out, and we just go right back to trading. And instead of being at 21,600, we're at 15,100. All right. And let's go get the trend and let's trade and get the hell out. Who cares? All right. We're at 320. I'm going to turn my strategy off. Um, yeah, yeah, I'm going to demonstrate best practices and we're going to just turn it down off. Where is my little program here? So I'm going to turn it off, disabled. So there'll be no more trades from me. I'm done. You know, less than, a weak effort for the week, but it is what it is. And here on this account for this one mini, right? So we got multiple accounts, we got multiple other things, but that's not for public consumption, and it doesn't really matter. And let's go back here. And if you got any other questions, we'll let you watch. Now, probably, maybe, maybe you see the 5 minute, maybe you see this fail. It doesn't look like it's going to, but it might. I won't get the trade. Am I going to beat myself up on it? No, but at least you'll get to see whether or not it would have done it, right? And with that, I'm going to kind of shut up and told a whole bunch of stories and a whole bunch of book references and video references. And if you come across some interesting books and some interesting interviews and stuff, knowing what I like too, let me know, right? Um, I learn a ton from everybody, and I like to read that stuff, whatever it is around, stuff around the markets, around economics, around history. Have fun, everyone. If I don't see you, still, again, congrats. You keep me posted, and I'm looking forward. I have you penciled for still. I remember February. It's going to be 30 days from today, right? And everyone else, if you have any interest in the Q schools, you got to let me know, right? Probably best to have a phone conversation. Good, you too, Daniel. What time is it, Daniel, in Norway? I'm curious. Here it's 3:30 in the afternoon. My guess is it's what, probably 11 p.m. maybe? Daniel's on delay. I'm on delay. Holy smokes, yeah, 21:30. Yeah, yeah, it's late. Bye-bye, Sil. Daniel, everybody have a great weekend, and I'll be nearby if there's any last minute questions. I always like to see, even though I may not be in the market, I like to see how they finish, right? Um, where they're all, even though they're machined, there are traders running those machines. There is a decision maker with that money, and I always like to know. It's one thing to buy and sell during the day, but it's another thing to hold positions overnight when the head hits the pillow or over a weekend. So um, I kind of thought they would have been in a selling mode here in front of the inauguration, but I guess they're not. So they don't seem to be too concerned, which is maybe a good thing, right? It is a good thing. Yeah. Hopefully nothing goes down. Have a great weekend. If I don't see you, any questions, let us know. Thank you. Here's another little 1 minute counter, 5 minutes, $150, 175, 180, $200. If somebody took it, I don't expect you to have taken it on YouTube, but if a member had taken it and it's a counter trade at that level, I'd say take your brand money, take it. That's what I'd be saying. Um, During Q school, when we're teaching, that's what we would do. Not hanging on, you don't hang on to those counter trades, trying to hit the long ball. It's just a counter trade. You don't want to be hitting, a 9-iron and trying to get it, down the fairway, 300 yards. Just hit the 9-iron, 110, 120, 130 yards, make your money, get out, wait for the next setup, hit it again, hit it again, either way, you'll make more money going in the direction of the five, or let me put it this way, it will be easier to do that, but here comes the five. That's okay. We're gonna watch it. We're gonna watch it. Leaves you hungry for next week, right? I'm gonna let you watch, but we'll see. And if the trade would have gone in, you're gonna see it here. So let's see how much I miss, right? But that's okay. Don't, and I wouldn't suggest anybody on YouTube land be, getting short here in the last hour, because the last hour of the day, the last 30 minutes, what you got a lot of jockeying. People are wrapping up, people getting positioned for next week. There's just a lot of turbulent waters, just a lot of stuff. And same thing on options expiration day, a lot of things, so um, the machines can struggle on those days, just like it can struggle like right in front of the Fed minutes or right in front of a Fed announcement. Sometimes it can you get a lot of cross currents, a lot of, just a lot of noise coming in, right? And we're all about signals over noise, signals over noise, signals, trading signals, hard baked, computerized, um, execution, discipline, outcome. Now the futures trade until 4:15 every day, including for today. The public markets will close at 4. Um, then they take a break from 4:15 to 4:30. Then from 4:30 to 5, they square up their books a little bit, you know. Sometimes there's some action there. I don't usually trade in that area, and it's fairly thin, but we're gonna let you watch. Probably, we're going to turn down, between 4 and 4:15 or so. But, for all intents and purposes, the day is over, the week is over. I hope you had a good week. Thanks again for stopping by. And we'll see if sometimes they can be a little bit of a jailbreak. And there'll be folks, speculating on the dark side in the event that something should ever go down over the weekend. They might come in with some options. They might come in with some contracts to play on the dark side. We've had a, pretty big up week, pretty big move up. There are those gaps down below. A lot of times, when you get a feel-good event like a new president and an inauguration, half the country feels great, the other half feel like, it's the end of the world. Usually the feel-good, overtake. And but then after the event itself, I wouldn't be surprised this time next week we're actually retracing much of this and going after those gaps. I still think so, but we'll see. We don't trade that, right? We just trade the algos intraday. We get our options on, for 3, 4 weeks. We're just 35 to 45 days. We're trying to hit the side of a barn. Um, so intraday, we're spear fishing. Um, on the options, we're dropping a crab pot over the side of the boat, letting it soak, pull up the crab, throw it in the bin and do it again, right? How hard can that be? It's actually, it looks easy enough, but I think it's pretty hard work, right? But you're the skipper, you're the captain, you're the captain of your boat, not me. Nope, we're just going to teach you how and show you what we do, and then you're going to get to skip your own boat. Have a great weekend, everyone. Thanks. See you next week sometime. $14 minutes, $170, $150, 148, 5 minutes since 3:35, 6,500 was up higher, right? We were up in here. That was about 7 grand. And it just kept buying the dips, buy the dips, buy the dips, buy the dips. Or could have just held on. But um, I would certainly capture that profit though. Right? Person, if one of our members has it. If you come in on a time frame, we don't always use time. If you come in on a time frame, you want to ideally come out on that time frame or come out on a smaller time frame. Where you get in trouble is when you come into a 1 minute and you try to stick around for a change on the five. Or you come in on the five and you're trying to stick around for a change on the hour or the daily. That is death by Ruru. You'll get caught and you lose money. They will brutalize you. So you want to come in, if you come in on and the entries matter, if you come in on a time frame, whatever that time frame is, you want to go out on that time frame or smaller time frame. You come in on a daily, you want to come out on a daily. You want to come out on an hourly or something smaller. You don't come in on a daily, then start looking at the weekly chart and like, oh, I think I'll stick around for that. No, that's not a good practice. And you never average down. Never add to losing trades thinking you'll get out quicker. You won't. You'll lose more and you lose more quicker. So we never ever average down. We only add to winners. And the only time we might average in might be something with options, but it's predefined and we're trying to get around a particular price. That's about the only time. So in that instance, that is. But otherwise, in futures, no, we never ever average down. That would be very bad. I don't know if you can hear this. I don't know if you can hear that in the background. That's Abby ringing the bell. The dogs know it's 4 o'clock. They know it's park time or walk time. Amazing. They go get their toys. They start beeping their toys. They've had a great day. Did I tell you we found a couple of steaks from the COVID days, a couple of filet mignons that had been frozen in the back of the freezer for what, 5 years, 4 years? A couple of filet mignons. Mike Susie, I'm going to grill them up for the dogs. So I'm not going to eat 4-year-old frozen steak. Get this little 2 minute. The counter lost. There's a little 2 minute and squeeze it out. And so I grilled it up. Oh my goodness. They ate some of that. Snooze the afternoon. They got a pretty good life. They're not going to get that every day, but that would give them a treat. All right, here. So, you know what? Swing machine, swing machine. Yep. What's going on, Abby? What's going on? What's happening? We going to the park? You getting a walk? What's happening? What's going on? Oh yeah, 1 year old golden. Well, we're not getting short here, right? You know, but if you wanted to be sneaky and you throw a little something on over the weekend as a put or something, I get that, maybe, an expiration for Tuesday or Wednesday. Maybe, you know, um, hedge, especially if you're all long, right? You always have a little hedge on. Um, we have, we have options on. They're all in good position. But Swing Machine was good to the extent that it kept us patient. And you know what? We just never got a short. We just never got it. And then here, I put that on last night, and the coach got I didn't happen. So fine, I didn't trade. C'est la vie. Okay, kids. At 4 o'clock, we will turn it down. Thanks for stopping by. Be sure to visit the site. Give us a shout anytime. Just have your question. I have a review. There's a little 2-minute counter, very quick one, right? These are counters. Those are the counters. If you get up, make 300 on that, you just want to take it. Um, and I'm in the office. Well, you can call any day, 9 a.m. to 9 p.m., but you want to have reviewed the site, think about it. If it resonates with you, you got specific questions, I get it. I'm happy to chat with you. I'm in the office every Saturday morning, early until about noon. And then I'm be hopefully golfing maybe. And then Sunday, late in the day on Sunday, and then we're right back at it again. And I really look forward to it every week. I mean, Jesus, it's great. It's great. Okay, hey girl, what's going on? Hey Ted, that is not me. Be sure to mark that price down. 21,672. Could not get through it. 21,672. We may be shooting against that all next week, so we want to know that number. The near-term support here on a 5 minute is 21.4, so pretty big spread. We may take that out on Sunday night. We'll see. I'm not doing okay. We're not going to do anything right now, but you might want to know those numbers, right? So you can see them right here. 21,672. This one, swing high, and this one here, 21. Looks like 21. 21 481. That's that high. It's only 5 minute, but a high consolidation level up there.